remember, you have to learn before you could earn. All right. Now, if you're watching us on YouTube and Facebook Live, we are broadcasting live. Just like us and friend us. You have that little button if you like what we're doing here. And if you can share us, like I said, the cheapest trade you can make is learning how to trade. Now, let me just bring on our first guest, Jody Samuel. Let me just tell you a little bit about her. She is the founder and CEO of FX Trader Edge. Now, she's also an author of the 10 Habits that highly successful traders. She has a little bit more of an institutional trading background. She was inspired a lot of traders because of the lack of guidance of developing a proper trading skill in their habits. So she kind of helps them to be equipped with the right real life emotions, the psychological effects of today's markets. And she's going to be covering a lot of that stuff within the next 45 minutes. So without further ado, everyone, let me just pass everything over to her, Judy, and she's going to share her screen. And like I said, if you have any questions, feel free to ask them in the chat room. But thank you for being here and enjoy the Cyber Expo.
Fausto, hi. How long do I have? Can you just tell me how long I have?
Right up to about like I said, up to about the 12:55. If it's okay with you.
That's fine. Okay, perfect.
Time flies when you're doing these events and you're having these conversations. The next thing you know, it's like it goes quickly. But enjoy.
Okay, thank you so much. Thank you, Fausto, for inviting me to your Cyber Trading Expo to educate traders. Like you just said, I think it's just fantastic what you're doing. So I just want to thank you for inviting me. And I'm going to speak about a topic that I'm very passionate about, the top 3 trading habits for 2021 and how to help traders reach their full potential as traders and reap the rewards that trading brings. This content is based on my book, The 10 Habits of Highly Successful Traders. It gives you a practical foundation to building your trading business, i.e. building that trading account. But I'd like you to stay to the end because I'm going to tell you about my Wavy Tunnel Pro program coming up on April 11th, where I teach you the strategy to trade the market cycles, as well as coach you to make sure you put it into practice and create profits to your bottom line. So are you spending too much time spinning your wheels without making progress? Not sure which techniques to apply? Want to understand the market a little bit better? So that's why we're here today. So in today's session, let me help you to see a clearer vision for your trading business by sharing with you what I think are the top 3 trading habits. Let's start with the trader's pendulum. All traders ride on a pendulum every day. Unsuccessful traders ride the pendulum back and forth with no real idea of the pendulum's swing. And successful traders recognize that the pendulum swings and ride it mindfully. As a result, they make better decisions and better trades. So the pendulum factors, think of a pendulum moving back and forth. It represents 2 situations arising from trading the markets. So on the one end of the pendulum swing, there is one thing going on, and on the other, often opposing, and there is another thing going on. So ideally, you as a trader want to remain or get back to a neutral position because staying at either end can be unproductive. And there's nothing that you can do about the swings, but you need to learn how to ride them mindfully. So the lack of skills to weather the swings is what makes trading an emotional, psychological roller coaster ride for traders. And believe me, I can attest to that after trading on Wall Street for 15 years, especially trading currencies during the 80s. The markets were very, very volatile. And we're experiencing that volatility today. So you're getting a taste of that. Although there was a lot more back then, believe me. So there are 3 types of pendulum swings that I want to talk about today. First, start off the market pendulum. The market trades up and down all the time, but how do you know where to exit and where to enter and exit a trade? So you need to learn to recognize the pendulum swings. And by that, I mean the trends and the corrections. After we have an extreme and exhaustive move, we're going to have a correction. So do you think it's time to enter the market after we have a string and extreme and exhaustive moves? And you can actually look at the candlesticks to see that as soon as we have a reversal candlestick followed by a second one, we're probably going to have a correction. So do you want to get in after we have an exhaustive move? Absolutely not, because we're going to have a correction most likely after that. So the market pendulums are the trends and the corrections. And to trade the market pendulum, you need to have a strategy which you can use to trigger your trades and exit your trades. I use Elliott wave analysis to ride the market pendulum. I'm going to talk to you about that a little bit later. So when the market is very stretched, you want to take a step back and watch it move back to the moving averages, watch price come back. So that's the market pendulum. The financial pendulum is making and losing money. So making money from trading isn't a one-way street. And I know all of you can attest to that. On the one end of the pendulum, there are times when you make money. On the other end, there are times when you lose money. So both winning and losing are part and parcel to trading. It's important not to bet the ranch so that if it's a losing trade, you lose the entire account. And it's really, trading is all about managing the money in the account so that when you win, your wins are bigger than your losses. That's really very important. Otherwise, you can work so hard every day for 1 week only to see the profits disappear at the end of the week from one trade. I hear that, I see that over and over again from many, many traders. So you are not alone. And finally, the emotional pendulum is best described as the fear and greed continuum. On the one end of the pendulum swing, you have the desire to earn more money and be driven by greed to take larger positions. But on the other end, you are in fear of losing money, and your actions might be held back from fear. So learning how to balance between these two factors is the focus for you as a trader/investor. Remember, greed can lead to exuberance, fear can lead to despondence. So watch these emotions. And that's why it's important to have a trading plan to protect against the emotional swings that can be damaging to the P&L. The more objective you can be with your trading decisions, the less emotional you will be. So hear that again. The more objective, the less emotional. Okay, and these are some of the pendulum scenarios that traders deal with every day. Fear versus greed summarizes the first few emotions below it. Self-doubting can lead to fear. Overconfidence can lead to greed. Being too cautious can come from fear. Reckless trading can come from greed. Also, it's really, really important to be organized in your trading, to have a schedule that you're going to follow during the week, to make sure you review all of the trades that you have on the books. Make sure that you have a plan for every single trade that you have on the books. And sometimes flexibility is really a good thing. The market changes every day, every minute. So why be stubborn with your view? And calm versus nervous. When we develop self-confidence in our strategy, in our trades, we become calm versus nervous. So let me tell you about the technical trader's trap before we go into the top 3 habits. Here we have Farah and Fred. They're our technical junkies in the technical trader's trap. They are out of shape. Farah was a retired IT professional. She decided to take up trading, and after 3 years of searching the internet for the next best system, she found herself out $50,000 between money spent on buying systems and losing money trying them. So let's call her frustrated Farah. Fred was a highly paid engineer. He was sick of working for an employer, and he had an ex-colleague who told him about trading that attracted him to trading. So he quit his job and jumped in with both feet. He had some capital, and after a year, he remained in seeking mode, endlessly going after every secret strategy that trading gurus guaranteed to bring success. And that's what I call the technical trader's trap. So both of these traders had no business plan. They weren't making money consistently. They lacked discipline. And I like to call that habits, because everybody can develop good trading habits. They traded emotionally with no trading plan. In short, they were out of shape. So there are technical junkies. But now let's move to Steve and Stacy, are transformed entrepreneurial traders. Do you want to become an entrepreneurial trader? I hope so. So Steve and Stacy are transformed. Let's see what they do to run their trading business. They're at the other end of the spectrum. Stacy started her trading career slowly and steadily. It took her months to settle on a system and run tests to prove her strategy, one with which she was finally comfortable. Although selecting and testing her system was a long process, as a result of this work, this legwork, that she had been making consistent income. At the same time, the freedom that trading provided had allowed her to be a stay-at-home mother. Even with COVID, at this stage in her trading career, trading seems to offer her more flexibility, intellectual stimulation, and reward. So she's good to go. Steve has a really solid trading routine. He has a trading and wellness routine. By 6 o'clock, he's in his study meditating. And with his meditation, he clears his mind, but he also becomes focused and determined before his trading days. And this is really important for his life and his work as a trader. After his meditation, he takes a little run, he takes a little jog for 30 minutes. And then he comes back and he has his breakfast and he's ready to start work in his home office at 7:30 a.m. He launches his news feed and he starts reading the overnight news to see what went on, and he gets prepared. He looks at his book, he looks at his trades, his positions, he looks at the markets, and he decides what action he's going to take if certain criteria are met. So both Steve and Stacy used to be technical junkies, but they have transformed themselves into successful entrepreneurial traders. They both have a business plan. They're both making money consistently. They trade with discipline. In other words, they've developed the proper trading habits. They trade unemotionally and they have a clear trading plan. In short, they are in shape. And here's how they became successful. This is the trader's quadrant. Stacy and Steve both moved from the left side of the chart to the right side. So what does it take to move from the left side to the right side? Learning the habits of successful traders. On the left side is the technical trader's trap, and new traders and experienced traders can live there. On the right side are the transformed traders. So on the left side, let me ask you a question. Do traders on the left side keep track of their trades and learn from their mistakes? What do you think? Probably not. Do traders on the left side trade at organized times during the day or during the week? Probably not. Do traders on the left side just take trades and hope for the best? Probably. So on the right side, you have the transformed trader. A new trader can develop good habits and become successful, and an experienced trader can learn from their mistakes and become successful. So let's jump in right now and start with the first habit that we're going to discuss today, which is habit number 5 out of the 10, called understand and exploit your unique trading personality. What trading style do you prefer? There are many different trading styles due to the simple fact that everyone is unique. You all have different personalities, and different personalities are better suited to certain trading styles. So, for example, if you are sitting in terms of this in front of the screen watching the market action and you love that, you may prefer momentum or day trading. Also, you might be a new trader starting out and you need to take a lot of trades to really understand the mechanics of trading, understand your trading platform. So you might even start as a short-term momentum or day trader. Also, you might be the type of person that isn't very patient. So therefore, you want to just take your position and take your profits as soon as you see your profits, and then take a few trades during the day and meet your day trading P&L and be done for the day and go work out or go take a nice walk. We're having beautiful weather now finally in Toronto. So these are all of the uh, things that you have to think about for short-term momentum or day trading. But make no mistake, whether you're a short-term, medium-term, or long-term position taker, the difference is you can make the same kind of money. The difference is you're monitoring every day for short-term momentum or day. Maybe you're monitoring once a week. Well, every day you can, trade, but in other words, monitor what you've done at the end of every week if you're a swing trader, and maybe you monitor once a day for long-term positions and really take a look once a month. So if you like to analyze the markets and establish your trade plan and let your trade play itself out, you might be better suited to swing trades. And you might set 3 different profit targets and hold the position for 1 to 3 days. I'm going to show you a trade management strategy today as well. And as a long-term position trader, you might be holding your positions for at least a month if the market is going your way. So for this, you need patience, mental stamina, and the ability to ride down drawdowns. And there is no right or wrong style. The key is finding the style that suits your temperament and lifestyle. So look at this matrix to help you determine the trading style that suits you. There are a few, in addition to short term, medium term, and long term. What kind of trader are you? Are you a conventional manual trading person, or do you prefer to automate your trading strategy? So, as a manual trader, you may be discretionary in your trading, or you may semi automate your trades. You might decide to automate like when you get into a trade so that your system shows you when to get in, and then you manually execute the trade and set your stop and profit targets and monitor your positions. As a fully automated trader, you have it's set on autopilot for you. But make no mistake, please don't buy a black box system unless you understand what's behind it. Most successful traders that automate their trading build it themselves, and they know exactly what the strategy is, and they've tested their strategy, they've traded it manually, and then they go on to automate it. So that's my only caution. Very important. Let's move on now to the second habit, which is habit number 6, follow a system. We've already said that both discretionary and systematic traders have systems. If you look at highly successful organizations such as Microsoft, Amazon, or Walmart, you find these companies are doing the same thing the same way every day with consistency. They find a winning formula and adhere to it. So ask yourself if you have that winning formula to get that trader's edge. And if so, are you executing that formula or system consistently so you have confidence in your ability to follow it? So you may have started out like Farah and Fred, going to lots of seminars, taking loads of courses, trying every guru system. So at some point you need to stop jumping from system to system, take a step back, develop your own game plan, your own system for your own trading style and temperament. You will formulate what works for you. You may need some coaching, some mentoring, and that's fine, but what's really important is that you develop confidence in yourself and your system to follow it. And sometimes that means reading it out every day before you trade so that you are clear what you need to do, because our mind plays funny tricks on us. It really does. So developing habits to follow our system, it's a daily thing. Every day we wake up and we get the opportunity to do it all over again. And the more boring it is, I say the better it is. So we like boring as traders. We don't like excitement as much as boring. Chart setup, general rules, entries, and exits. So your chart setup is the specific chart setup, the indicators that you have on the charts. If you use indicators, you are the markets that you're going to be trading. You set up your trading platform with the markets that you're going to be following. You might have a few different screens. You want to be clear on the time zones that you're trading. You might be in different parts of the world, so just be clear what which time zone you're going to be trading. And if you trade Forex, it's a 24-hour market. If you're trading the US market stocks, well, then it's a defined, you're trading the US market. You also would have up on your charts the time frames traded, and that has to do with day trading, swing trading, or long-term position taking. And like I said, you dress up your charts with indicators, tools, or even price action, candlestick patterns to help you identify a new trend and to help you confirm the trend and to help you get in. We spoke about general rules briefly. That's a set of rules that hold true all the time, and it reminds you to stick to the plan. And I would recommend writing down some rules that you would like to follow every day and read them before every trading session. Then you have your entry and exit rules. What triggers, and this is part of the trading strategy, what triggers the buy and sell decisions, and what triggers your exits, including stop losses and targets. So let's just take a little break now and talk about the market cycles and discuss the difference between trending and sideways markets. This is a picture of 3 different time frames superimposed over each other. So the red line is the daily chart, which is the longer term trend. The blue is the 4-hour, which is the more medium term trend. And the green is the 1-hour, which is the more short term trend. So the market might be bullish. It might be in an uptrend on the daily chart. But notice what happens with the 4-hour and the 1-hour. They cycle up, they reach a point of exhaustion, and they come back to the averages. They come back. They cycle back. They retrace. They breathe. So this hourly chart, this is an Elliott wave 5-wave sequence with a 3-wave pullback, another 5-wave sequence with a 3-wave pullback, another 5-wave sequence, waves 1, 3, and 5. And then we have a bigger correction. This is how the market unfolds in a simplified fashion. But this is pretty well how the market unfolds on every different time zone or time frame. So even on the 4-hour chart, we have a nice 5-wave move up, and then we have a nice pullback. So your job as a trader is to, if you're bullish, is to get in on the pullbacks, Now notice what happens at the beginning of the market cycle and at the end of the market cycle. This is what I call a market reversal. So here we're moving lower. And then what the definition of an uptrend is higher highs and higher lows. And in this case, lower lows and lower highs on the left side of the market. So when do we change into an uptrend? When we have a higher high and a higher low, which would be once we take out this point here. I hope you can see my cursor. The market moves up, it corrects, and then it moves back up and takes out this high, and now we have higher highs and higher lows. So that is the start of the uptrend. And that happens at the end of the trend also for a market reversal. So just keep these things in mind when you're trading. Now let's look at the next chart, which shows you what a sideways market looks like and what a bullish market looks like. So we have a bunch of moving averages here. And when the moving averages are moving up and separating, that's when we're in an uptrend. When the moving averages are twisted and sideways, the market is in a sideways consolidation phase, and it's best to wait for the trend continuation before buying in an uptrend or selling in a downtrend. Now you can trade the sideways markets, you can trade the twisted moving averages, but you need to trade it a little bit differently. You're not just going to be buying and holding. So just reading from the top, this hourly chart highlights the moving averages that capture the broad trends in this market. When the moving averages are pointed up and separating, the uptrend is in full force and the trader can buy the dips. Notice how you don't know what this is. This could be a stock. This could be a currency pair. You don't know, and you don't even know that it's an hourly chart. You only know it because I told you, but this could be a daily, it could be a 4-hour, it could be a 1 minute, and it could be any asset, any asset class whatsoever. It can be a commodity, a stock, a currency pair, a cryptocurrency. It can be anything. You don't know. Why? Because the markets are fractal and all the markets trade really in the same way. Now, it is important to understand like the personality of the markets that you're trading. Also, there might be some specific things that you can see from different asset classes that you're trading, and there might be some seasonal factors affecting the market. So I am oversimplifying a little bit. Let's go back to habit number 7, plan the trade and trade the plan. So in our Wavy Tunnel Pro system, which I'm going to talk to you about at the end, we have different trading strategies. We have 4 trend strategies and 2 end of trend strategies. The trading system is a collection of trading strategies. So I define the trading system as the combination of the analysis techniques that you use and the trading strategies that you use. So in our system, we use Fibonacci, Elliott wave, and harmonics. And the strategy is called the Wavy Tunnel Pro strategy. So that is just an example. Now, the trading strategy consists of entries and exits based on price action, analysis techniques, and or chart setup with indicators. However you read the markets, whatever strategy you learn to read the markets to determine your entries and your exits. That's this trading strategy. And I mentioned that we have 6 strategies, and not all traders use all 6. Again, traders have different personalities, and some tend to gravitate to 1 or 2, and others tend to gravitate to another 1 or 2. You don't have to trade everything. Some traders might be better at trading trends. Other traders might be better at trading end of trends or sideways markets. It really depends on you. The trade plan is a set of rules for when the trade opportunity arises. So it's specific to the market that you're trading. The path to greatness lies not only in our performance, but in the systematic practice we put into it. So trading mastery is about internalizing patterns, rehearsing execution skills. So you got to know what your trading platform is all about and how to navigate your trading platform. That's where you execute your trades. And you will learn from market feedback. The market will tell you very quickly whether you're right or wrong. And it's all trading mastery is also about preparing your trade plan so that you are fully prepared for whatever the market brings. Whatever the market brings. I'm going to show you my trading blotter, which is a manual trading blotter, and these are all the elements that I like to look at when I'm trading. I like to do the analysis first, and then look at my checklist or scanner to see what high probability trades there are, then create a trade plan and do a post-market review. So you can take a screenshot of this if you'd like, and you can determine your own trading blotter. But across the top, we have the analysis, and you can use your own analysis. Again, we use Elliott wave analysis and harmonics and Fibonacci. So across the top, we have, just simply what is the trend, the monthly trend, the weekly trend, the daily trend. Is it up? Is it down? You need to know that for whatever market you're analyzing. And then what are the support and resistance levels? And you can have these right on your charts. Most traders do. So you don't need to fill this out. You can just put them right on your charts. And learn a little bit about what the other markets are doing, read an article once a week or once a day every morning if you're trading every single day. Read an article to see what happened overnight and to see what the various markets are doing. So have a look at the different asset classes, have a look at the global equities market, what interest rates are doing, what oil's doing, what gold is doing, what crypto's doing. So that's across the top, the analysis. Then across the middle, that's your trading strategy. So you have your trading rules, indicators, confirmations. It can just be as simple as a checklist. And then once you automate it, it will be automated in the strategy in the trading platform. So this tells you whether you should go long or short. Is that if everything is checked off long, well, that's a pretty good indication that you want to be going long. If it's very mixed, well, maybe you should hold off. And you can write your comments down. And then once you've gone through and you've come up with your high probability assessments, you want to do your trade plan. Okay. And that's where you set you set up your trade, where you enter, what your stop loss is, and where you take your profits. At the end of the day, you want to do your post-trading analysis, and you have your feelings before trading, your actual trade planning, and then your end of day or end of week, your actual trade results. Were your targets hit? Did you follow your trade plan? So now I'm just going to talk to you about a trade management strategy that I developed. It's called the 3 Profiteers, which is number 2 here, getting in all at once and taking profits at various levels. So these 4 strategies go from simple to more complex, and which strategy to choose is a function of the trader's experience. The first one is the most standard and simplest. It's for new traders and even experienced traders getting in and out all at once. So if you're a momentum or day trader, you're probably going to use this anyway. But I'm going to show you number 2, getting in all at once and taking profits at various levels. This is good for maintaining balance on the fear and greed continuum that we spoke about. And it's perfect for perfectionists who want to capture every last pip or every last dollar in the move. And I really developed this for me because I tend to be a little bit of a perfectionist. So what does that mean exactly? It means that I wasn't happy if the market moved my way and I took my profits too soon. And then I would get into the cycle of letting it go my way and saying, well, I'm just going to wait, and then watching it go back to where I took the trade and giving up those profits. So that's what I mean by perfectionist, and that's why I developed the 3 profiteers to take profits along the way. And this is how it works. You determine the potential profit area, the PPA, and assume the PPA is 100 pips. And with stocks, you use dollars. So assume the PPA is $10 or $100. Then you use the Fibonacci sequence. This is the Fibonacci sequence, and it goes even further, but we're just going to deal with these numbers here. And pick 3 profit targets, the third ending at your PPA. So in this case, the PPA is 100 pips. So the Fibonacci sequence to determine your profit objectives, we work backwards. We would start with 89 and then go to 55 and then go to 34. And in the case of stocks, we would go for, if we use $10, we would go for $8.90, $5.50, $3.40. Then you set your stop loss at the first profit target. In this case, it's 34 pips, and move your stop to break even once the first profit target is met. And you can move your stop to P1 once P2 is met. You calculate your risk reward. And with stocks, this is your risk reward with stocks. No, you use dollars, so it's the same. $5.90 versus 59 pips. Okay, the risk reward will be exactly the same, 1.74. So this is, I'm going to show you a currency example and a stock example. So the price moves down here, and we're anticipating price to move back up again into the wave. This is a 55 pip difference, okay, from the profit target and the trade entry. So we work backwards from 55, and we set 3 different profit targets, 55, 34, and 21. And that's how we just set it in our trading platform, and then we follow it and we see. So all 3, when the first profit target is hit, we move the stop to break even, and then we move the stop to P1 when P2 is met. And then we're out of the trade when the 3 profit targets are hit. Maybe only 2 profit targets are hit. That's why we move our stop, so we don't lose money on any part of the position. We're going to be proactive. This is a stock example, Microsoft. So at this point, this is the trade entry. The market has a nice reversal candle. We're going to leave a stop sell, 240.85, and our profit target is down here, okay, 231.40. So there's a $9.45 difference. So we set our 3 profit targets using the Fibonacci sequence. That's $8.90, $5.50, $3.40. And this is just the semantics, what you do. You take all 3 positions at the entry price. This is your first profit target, second and third, and you move your stop to break even when P1 is met. So you're protecting yourself. This is your stop loss. And this is what happens. So you get filled for your first target here, your second, and your third, and you're out of the trade. You're out of the trade, and you're on to the next trade. That's a good trade. This is the Wavy Tunnel Pro, by the way, and this is the system that we use, and this is what I'm going to be talking to you about shortly. So we just learned 3 of the 10 common habits of successful traders, and the simplest way to succeed in trading is to learn from the best and model their habits. So why should you practice these habits? Because learning them will help you save a lot of time and effort, make more money, and achieve your full potential as a trader. And I really do believe that trading is about building habits. It really is. It's just getting into that routine and just understanding what those habits are and just working it. So you can always replace negative trading habits with positive trading habits, and you will see a dramatic change in your results. Dramatic change. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. So really, it is my hope for you, all of you today, that you achieve much personal and trading success in the many years to come. And now I'm going to show you how you can develop the proper trading habits and how you can join me in my upcoming training starting April 11th. So I already told you that we use the Wavy Tunnel Pro strategy, and there are 6 trades, 4 trend following trades, and this is what we call them, breakouts 1, 2, 3, and 4, and 2 end of trend trades called PW and fill the gap. And this is the 8-wave market cycle, where you have the Elliott wave 8-wave market cycle, where you have your trend move and then you have your corrections. And the wavy tunnel trades trade the various parts of the market cycle. And like I said, you do not have to trade all of these trades. Some traders really like the breakout 1 trade. Other traders really like the breakout 3s or the breakout 4s. So it depends on your trading personality, and we figure it out together what's best for you, because I'm also a trader's coach. So I help you to decide what's best for you as a trader. Once you master the simple concepts of using the Wavy Tunnel Pro strategy combined with the bungees and the semaphores, you can make more accurate, high probability trades each day, resulting in more profitable trades. Thank you, David. This is the trading system that has worked for me over the past 30 years and counting, and it can work for you too. The Wavy Tunnel Pro 5-day accelerated trading and mentorship program. You can start now and join me for coaching starting April 11th. So all of the course material is there already, or you can take the 5 days and work with me for the 5 days. You can do both. The Wavy Tunnel Pro is a solid master's in trading education for all asset classes, instruments, and time frames. No special software is required, and it works on all trading platforms. And as I mentioned, this is our flagship trading program, my personal system to achieve consistent profits in any market. And this starts on April 11th. This is my team. And Neil runs the trading rooms, and he runs the trading rooms, and the students are really doing well with the high probability setups that they are trading during the week. And Jeff is our automated trading specialist and stock and options master trader. This is how we'll do it in a 1-week program. Section 1 is the Elliott Wave series. So that's day 1. And what I've done is I've taken all of the training that I've developed and I've created really nice videos to capture what I think are the most important points from all of the training that I've created. You still have access to the archived training, but I've really tightened it for you. So on day 1, we learn all about the Elliott Wave market cycles. On days 2 and 3, that's where we focus on the Wavy Tunnel Pro trading strategy. On day 4, it's all about live trading, going into the trading room and really looking for setups. And day 5 is about incorporating harmonics strategies with the Wavy Tunnel. I call it the icing on the cake. You'll learn the exact trading system I've used to successfully trade in both institutional and retail markets over the past 3 decades. There is more than 60 years of trading wisdom collected here. So what's the price? It's $12.97 or 3 pay, $4.97 each. And it starts April 11th, and you sign up at wavytunnelpro.com, wavytunnelpro.com. So what do you do next? You click the purchase button, choose your payment plan, get your login info, and gain instant access to the full Wavy Tunnel Pro course. 5 days, 30 training sessions. As I said, pruned and really tightened up. The premium bonus is the live Q&A and coaching sessions and mastermind that I'm going to be holding with you, 3 sessions a day for 5 days. And you will also have access to 15 live Q&A and 11 student trade analysis sessions comprised of trade review and analysis, where you will internalize the concepts with numerous examples for practice to speed up your development. You will also have access, premium bonus, to the Wavy Tunnel Pro and Wave Count Desk membership, with the trade scanner for Forex stocks, commodities, and crypto, 4 London and New York trading and analysis rooms per week, daily wave count videos on 20 markets, trade with confidence videos and psychology podcasts, and trade alerts with entries, stops, and profit targets on Telegram, and Discord membership channel where the members can communicate with one another, and our automated trading tool. So just a few good trades will pay for this entire program. So I see that the link that was posted there is a different link. So I apologize. WavyTunnelPro.com is where this program is located. And so just check it out. But you can certainly click on the link that's posted there, because it looks like that will get you to try it out. That will get you to 3 Elliott Wave videos. So you may as well start with that. So we are going to hold your hands and mentor you to success in the trading room and Discord channel with our successful members who love to pay it forward. Join the stock channel with our options expert, and join the Forex channel with our Forex expert. And again, if you're sitting on the fence, then certainly watch the 3 videos that we have created especially for you with this event. And if you want to just jump to the head of the line, then you can sign up directly at wavytunnelpro.com. So this is the price. And just to recap, it's a 5-day accelerated trading and mentorship program with 30 trading sessions and live Q&A, access to the Wavy Tunnel Pro original modules, lifetime access to the trading material, and access to the Wavy Tunnel Pro Mastermind and Trade Review, so you can really internalize the setups, and you will get 1 month free to the Wavy Tunnel Pro and Wave Count Desk and Scanner with premium concierge support, Discord channel, special reports. So just take action now. Go to wavytunnelpro.com, or just copy the link that's in there. If you're sitting in the fence, but this is my exclusive offer for this event. And if you sign up over the next 24 hours, you will receive my business plan for traders and investors. So this discount ends on Sunday. $12.97 is the best price. Accelerated trading starts April 11th. So if you have questions, you can certainly contact me at jody@fxtradersedge.com. I enjoy speaking to traders and helping you decide what's best for you. Again, every trader is unique, and I realize that there is a lot of material out there, but this is a great event for you to be at. Thank you, Fausto, for organizing this. You have 4 great presenters, so if you didn't resonate with what I spoke about today, you have 3 other presenters that you might resonate with. So thank you so much. And do we have any questions?
Yeah, if anybody has any questions for Jody, this is probably a good time to kind of shoot it out there. Just really quick, Jody, the thing I was very impressed about, that little Excel spreadsheet that you have. How do actually people get that? You have to be part of the program?
I can give it out to people if they email me.
Okay, great.
If you,
So
that's fine.
I'll be your
If
first customer.
what? You'll be my first.
FaustoPCTUcorp.com. Great traders always surround themselves with great traders. I tell people that all the time. And you have to learn. You can always learn something. So hopefully everybody can pick up something. You got a question right here. Are you a TO so that what traders platforms are you using?
What trading platform am I using? So yeah, so I use Oanda for Forex and I use Thinkorswim, TD Ameritrade, Thinkorswim for stocks and options.
Yeah, I think Thinkorswim's a very good platform. I've been using that for a while too. I mean, obviously, it's all about also support too. That kind of helps out too. So stick with everyone else is using, not what not everyone else is not using.
Yeah, I think you just have to try it out and see what, yeah, if the support is good. I like the support that I'm getting there as well. Yeah.
Yeah, that's good. It's good. Well, listen, Jody, thanks for having us and having us coming here today and taking the time, talking to the audience, and hopefully everybody will take advantage of that promotion that you have. And we'll looking forward to having you back here again in the near future. And if anybody has any emails, her email's up there, Jody at fxtradersedge.com. If you have any other questions, listen, you know what? The last thing that could happen is that you go out there and you get something that you couldn't get on a YouTube or on an email, but just a quick little talk to Jody will help you get you there. But thanks again for coming, and we'll look forward to seeing you again, Jody.
Thanks so much, Fausto. Bye, everyone.
All right, everybody. So let me just go out there and take over the screen here really quick, and let me just share you my screen. Let me just give me a second here. All right. So hopefully everybody could see that really quick. Could everyone see my screen okay? All right, perfect. Just give me a second here. Just want to get a couple of things moved over here, and then we will get started. There we go. Okay. All right. Just want to get the camera up and running and then ready to get going. All right. Perfect, everybody. So it looks like I see everybody in the room. And hopefully you like that little presentation with Jody. And listen, we have a lot more that's coming up. We got two more other presenters after me. I'm going to take over right now, and I want to talk about a little bit about how to become a successful day trader in 30 days. Now, I know a lot of you know who I am. Some of you are my students here. Some of you are part of my trading room. Maybe some of you heard me for the first time. But I'm here to kind of educate you guys a little bit more about the everyday trader, what we do, and how we trade today's volatile markets, which, once again, we saw what happened in the last couple of days. We're getting this little correction. Some of you guys, traders, are a little nervous. You don't know if this is time to get in, time to get out. But as a day trader, we look at things differently. We look at opportunities, how to trade during the day. Now, what I'm looking to do, I can get my animation spotlight right here so you guys can follow along my little dot. There you go. All right. But I have to understand that when it comes into trading, ladies and gentlemen, that trading is very, very dangerous. Results can vary from student to student. People can lose a lot of money doing this. Even by getting educated. But the way I look at things, where I train my traders, I try to teach them how to stop losing money, not teaching them how to make money, because winners take care of themselves. It's the losers, everyone has a problem. But once again, just got to be very smart when you go into trading. Don't go out there and risk what you really can't afford. And I just want to be very compliant so everybody knows that, because it is a very big failure rate. And the reason why a lot of people fail, because most of them try to do it on their own without getting proper education. So, and even education still might not help, but at least gives you a fighting chance. Now, what we're going to learn today is a couple of things we're going to talk about in the next hour. I'm going to tell you a little about what is day trading. What does it do? How does it work? How can I make a living off day trading? Okay. Because day trading back in the old days had a very, very bad name to it. Now, all of a sudden, it's making a big comeback. Everybody wants to do it. Day trading has exploded, by, I can't even imagine how much it has been going on as percentage wise. But people are starting to look at it that what is day trading and why was it a bad thing? Well, I could tell you why. A lot of people really were not day trading. We're going to talk about why do people fail. So hopefully you're not part of that group of people. How to find stocks to trade, because as a day trader, you're looking at what's really moving. How did you find these stocks? And also, one of the biggest things that probably going to make you fall off your chair is that what is level 3? You heard about it, but you don't know. You're like, wait a minute. I know there's level 2, my brokerage firm. There's a level 3. How about this? There's a level 4. Could you imagine that you've been trading blind? Wait till you see this is going to fall off your chair, and you're going to realize exactly why people are trading blind versus not doing the right way. But before I do that, let me just give you a quick little introduction for some of you that do not know who I am. I've traveled around the world. I competed against every school that wanted to go up against me, and I beat every single one of them. Now, I'm not saying that for an ego. I'm just telling you that there are people that are traders and there are people that are not. And the thing is this, being a champion does not make me a very good teacher. Okay. So what I'm going to do at the end of my presentation, I'm going to invite every single one of you, all of you that are in here today, into my professional trading room that I started 25 years ago. And you're going to see exactly why I teach, how I teach my traders to be very successful at it. And the worst thing that could happen is that you find out it might not be for you, but at least you could say you were in a room with a 12-time world champion, the longest running school in the industry, and basically see people actually make money doing it. SG, yes, it is being recorded. Absolutely. Now, the question is people always ask, and I love this question. I don't know how everybody else answers it, but why do you teach? Well, I've been doing this for 25 years, and I live here in New York. It's the financial capital of the world. But what ended up happening was when I started, the only way I became very successful is when I started working for someone. I worked for a trading firm. I was a market maker. And what is a market maker? Actually, I'm a trader for a brokerage firm. That's what I was doing. And let me tell you something. What I've learned sitting in a presentation like you're doing today, I lost a lot of money in trading, and I was 22 years old, and I deserved everything that happened to me because I didn't realize everything that I was doing was a totally opposite. And I didn't realize that there was this machine that was called Instinet. There was this machine that used to be able to trade with ECNs and all that. I'm like, oh my God, this is the greatest thing. So what I end up doing is that as a trader, let me put you in my situation. Back then, like today's times, you got to buy education. Back then, you couldn't buy education. You had to work for somebody. And the compensation for working somebody is that they charged you to work there. They gave you a desk fee and you split the commissions. So I didn't, like I was semi-retired at the age of 24. I did really, really well. But I mean, I didn't see myself keep working for these people and splitting my profits. I'm like, after a while, you're like, it's a lot of money. Do I really need them? So what I did was I started my own firm. And I didn't start a brokerage firm. I started a trading school because I needed to teach people to trade the way I've learned so we could trade together in the community. So I started one of the first online educational schools and the first chat room in the industry. So you're going to get the opportunity to be in the first trading room ever to see exactly why and everyone is doing what we're doing and why everybody's copying Cyber Trade University, which is very flattering. I don't take that in a bad way, but You're going to see what it's all about. But the thing is this, to be a good trader, you have to teach people how to trade and what to look at, because we're sharing ideas back and forth. There's no platform out there. There's no software out there. There's no crystal ball. Okay. You have to surround yourself with good traders to become very, very successful. Now, I have a question to ask everyone here. I'm going to do a quick couple polls. I'm going to launch a poll right here. First, I want to get to know, could everybody just tell me, what kind of trader are you? Are you a stock trader, an options trader, futures trader, Forex? Just want to get an idea of what kind of traders we have here. So you guys answer that. Just put it, Haas, just put it in the chat room. I mean, on the poll. All right. So I'm going to share this poll with everyone. And so basically, we look like we have a lot of stock traders, which is great. We've got some option traders, futures, and Forex. So this is what I tell everybody. Don't worry about, oh, I got to trade futures, oh, I got to trade. This is the way I look at it. You remember what today's topic is? How to be successful in 30 days? Well, the thing is this. If you're not making money or seeing success within 30 to 60 days, you're probably better off trying somebody else to teach you or try a different market. There's nothing wrong with that. We all know this is a great business, pays a lot of money. But if it's not working for you and you're not seeing it, that's okay. That's why you got to go. That's why just try something else. Because I'd rather do this than wait 6 months for a $1,400 stimulus check, which, by the way, I don't even know what the hell that's going to cover, okay, in today's times. So anyway, I day trade for one reason. I like to sleep at night. Day trading is you're in and out the same day. That's basically what it means. You're not, if you hold a position overnight, you are no longer a day trader. You're a swing trader. Now, do I swing trade? Yes, of course I do. I manage my own IRA. I'm not going to give it to some schmuck to trade it for me and lose it when I could just do it myself. What do I need them for? And then charge me a commission? You know what I'm saying? Like, you work so hard that you don't need someone else to show you 5-10%. You could do that probably in a day or in a month. So that's one thing. But day trading is a strategy where you're just focusing on a day's pay. We don't care what we trade. We don't want to know what we trade. We just want to make money. So as a day trader, we're just looking for a day's pay. If it's $200 a day, $500 a day, $1,000 a day, that's basically, the strategy behind it. How I made that $200 a day is irrelevant. If I told you I traded, what are they trading today in the trading room? They got a stock up there right now. Let me see what they're looking at. ODT. Okay. And I don't know. I'll just bring it so I could share it with you guys so you could see it. So they're looking at this stock right here, ODT. This is where I'm going to invite all of you guys. The stock went from $3 to $3.80. Okay. So, I mean, when you look at it, you got Ken that made 34 cents right now in IQ. Can's dropping. You can see all these traders, what they're looking at. But this is what we're trading. Okay. Stock goes from 3 to 380. You bought 1,000 shares of that stock. I don't know, $80 cents, 1,000 shares, $800. What is that? 200,000 a year? Who doesn't want that job? You know what I'm saying? So there's definitely a lot of opportunities out there. Now, how do day traders become very successful? Couple of things I want to clarify. First of all, there's just probably like 80-90% of you have the wrong brokerage account. We just have a new student that just signed up with CyberTradingu University, and he told me, he's like, Fausto, I got E-Trade, and could you tell me a little about them? I says, I can't because I don't do business with them. And he asked me why, and I said, I'll tell you why. They don't pick up the phone. They don't. I mean, it's just not there for you. They just don't. He told me he's emailing them, and I'm like, this is why you have a problem. You can't do business with somebody that you got money on the line that's not going to give you the customer service that you need. And that has a lot to do with having a direct access broker than dealing with some big brand name TV commercial on the Super Bowl, giving you free tickets. It just doesn't work. Okay. Listen, I think this is how I compare online brokers. I love public transportation. Paying $2.50 to take the bus, that's pretty cheap compared to buying your own car. Try to explain that to a pregnant wife that's going to give birth to your child. Oh, honey, we got to wait for the local bus. It's going to be back here. Oh, you're in labor. It's 12 o'clock. Okay, well, the first bus could be at 6:30. Yeah, let me know how that works out for you. I know that sounds ridiculous, but you want to deal with public transportation or you want to drive your own car? There's going to be an investment. You got to have the right trading execution. A lot of you here, I noticed that when we train traders, they have the wrong platform. They don't have it laid out properly. They're saying, wow, this thing is confusing. How many of you could raise your hand and say, Thinkorswim's a confusing platform? It's like, they give me these windows and you have to actually make an appointment with them that they have to show you how to do it, which is great, but every trader is different. If you're an options trader, a Forex trader, a stock trader, a day trader, different platforms, different platforms for different traders. Also, as a trader too, we only trade an hour in the morning and an hour in the afternoon. What do you think I'm doing right now? You think I could actually be doing an event and have money on the line? I mean, I can't. You think I'm really that multitask? No, absolutely not. So it's not a full-time job. So for some of you worried about, could I trade all day? No, it's not. It's also, it's all managing and finding stocks and the big percentage gainers and losers. That's how we actually go out there. And then most importantly, you got to be part of a team. How many of you here could raise your hand and say, you know what? I'm trading by myself. Yes, I'm in my basement. The first thing I ask everyone is, who are you trading with? Myself. How could you run a successful business being the owner, the manager, the cashier, the stock boy, the delivery man? How could you run a business like that? I mean, I know we're getting better in today's times, but you know what? You're running a business. You got to surround yourself with good business people. My dad always taught me something I want to share with all of you. When I was younger, my dad always taught me and said, son, he's an immigrant from Italy, I'm first generation Italian. And he came here with $20 in his pocket. And I'm basically a self-made millionaire. And same thing with my brothers and sisters. But meanwhile, we were sharing a room with 3 kids. How does that even happen? Well, the American dream obviously worked out well, but we were hard workers. And my dad always told me, he said, listen, how do you become very successful, Dad? How do I become a millionaire? He says, you know how you become a millionaire? Hang out with millionaires. And I'm like, wow, that makes kind of sense, no? But well, yeah, if you hang out with troublemakers, you end up being a troublemaker, right? So how do you become a good trader? You hang out with good traders. You think that you could be a good trader by doing it yourself? I mean, there's a chance, it's possible. But at the end of the day, why you got to learn the hard mistakes when you can learn from someone else's mistakes? That's one of the big ways of being very successful in trading. And so that's why a lot of people fail. People start mixing day trading with swing trading, with futures trading, and then they start getting, oh, let me do options because I could buy more. Now they're doubling down and tripling down. They're reading too many books. Everybody has an excuse other than hit the button. You know what I always tell everybody? Buy less shares and trade more. The only way you're going to learn is you have to trade. The only way you're going to learn is have somebody that's going to be piggybacking you and watching you and telling you, being a coach, basically. And a lot of you here are going to need more than one mentor. Just how it is. Listen, we're all probably trying to lose some weight, right? We're all probably trying to do the best we can. Try to get healthy. We get older. We get sicker. We see the doctor more often. So we want to lose a couple of pounds. So I went to the doctor, and obviously I have to practice what I preach. So I said, listen, doc, with COVID, I think we all gained a couple of pounds. So he came up to me and he said, listen, I want to see a nutritionist, this and that. He goes, and he's like, wow, I can't believe it. You actually want to see somebody to tell you what to do and you want to find somebody to mentor? He goes, yeah, of course. Why, I think I'm going to do it myself? He goes, I need someone to tell me what I'm doing right and wrong. You know, I can't do it all myself, because after you do the 17 diet, you're going to realize you're going to have to hire someone to help you. And that's what trading is all about. And that's why a lot of people fail in trading. So let me show you exactly what I'm talking about. Did anybody see this stock, JFIN? JFIN. The stock went from $5 to $13 in one day, in the matter of, what was that, 1 hour? About 2.5 hours. Did anybody see this stock? $5 stock to $13. 5 minus 13 is 8,000 shares. Could have been $8,000. I mean, I don't know. Did anybody? No one. One person. Two. That's it. There's over 100 people in here. No one saw JFIN this week? Okay. What about the next day? You probably missed it on Monday. How about the next day? It went to 15. Lewis, you did, obviously, being a student. Guys, don't be shy. Adam, Bill, Bob, Bonnie, Cheryl. Do I start picking on people? Gene, Gary Mills. What we got here? Jill Lee. Well, why are you guys afraid? I miss stocks all the time. If you didn't see it, just say, nope, I didn't see it. But are you asking me, how did the stock go up then? And that's the $64,000 question. Why did it go up? Why did it go up so high? Why did it go up in such a very quick way? This is why we love day trading. So how do you find the stock before it makes the big move? That's what it's all about. And it's very simple. You got to follow the money. First place that we always teach our traders is this. We work through our big percentage gainers. Okay. And you could see JFIN was obviously not up a lot. It was up about 24%. There was a couple other stocks that trade a little bit higher. But what I do when I teach my traders, we work off a scanner. And in that scanner, we're going to go out there. I'm going to teach you how to specifically pick the one that's going to give you the least amount of risk with the high amount of reward. Now, if you follow me on YouTube and Facebook Live, I know we're broadcasting live also. If you like us, you friend us, click on that little bell. You know, I always do a live broadcast. We do a watch list every morning. Once again, it's watch list. Doesn't mean a buy list, because buy lists are really legal. But we do a watch list, and we tell you what looks like out of all the stocks, they're going to give you the least amount of risk with the high amount of reward. Now, how do we know this? They're going to go up? Well, the strategy behind Cyber Trade University is following the money. I think we all can get that, right? Does that seem hard? Follow the money. Well, how do we follow the money? Well, remember, when I first started, and I was like you, when I first stepped into this arena, I was introduced something called an Instinet machine. And that Instinet machine back then, for a 22-year-old kid, cost $1,000 a month. Could you believe that? I had to pay $1,000 to trade on that platform. Today it costs $15. And it blows my mind where I could show you 70% where all the buyers and sellers are, all the dark pools, all the spoofing going on, all the algorithms, all the high frequency trades, all the institutions, all those for a lousy $15. And I paid $1,000. It was 20, and that was 25 years ago, and I was 22 years old. Well, this is how we separate the ignorance and the more successful people. You want a $250,000 job? You're going to have to pay. You don't want the $250,000 job? Then you know what? Just keep doing what you're doing, and let me know how that works out for you. And you know what? I might be a little brash, but let me tell you, when I first started, they used to rip us apart. They because you know what? It's their money, and they have the right. If you're not going to think about it and hitting your head and like, listen, do you get it or you don't get it? I mean, I'm still trying to find free employees. By the way, is there such thing? Is anything free in this world? Oh, wait, someone does have to pay for something, right? It might be free for you, but someone had to pick up the tab. So there's a catch. So my father always taught me, you don't want anything for free. You just want a good deal. If somebody gives you anything for free, you better run away. Okay, there's definitely a catch behind it. But we have to follow the money. So let's go and follow the money. So let's talk about JFIN. Okay, now listen, guys, I'm going to ask you guys some questions. I want you to interact. If you can't answer these questions, I'm just telling you very sincerely, you better quit trading. I'm not going to give you anything crazy. I'm going to give you basic kindergarten trading questions. Okay. So, how do we beat them? Very simple. You follow them. The brokerage firms, the institutions, the internets. That's how you find them. You don't have to do anything more than that. Remember, these people are moving billions and billions of dollars. Okay. You just want to make the crumbs on the floor. You're the ants. You don't like it, then you shouldn't be in this business. You can't compete with these people. You might not like them. You might not like what they stand for. But at the end of the day, can't beat them. You have to join them. That's it. So let's talk with something called NASDAQ Total View. So let me stop to share these results. And let me just ask everyone, pretty similar to level 3. So does anybody here have level 3 quotes, or does anyone have something called Total View? Just give me a yes or no in the trading, in the little poll question I'm posting up there. All right, wow, this looks great. A lot of you guys are starting to answer things now. All of a sudden, that makes me feel a little bit better. All right, can give you another 5 seconds. 4, 3, 2, 1. Listen, if you don't know, just say I don't know. You know what I mean? There's nothing bad about that. All right, so I'm going to share the results. Now, for the ones that did not answer it, I'll just take that as you don't. So with that said, I would say it's probably close. It says 59 with less than half you didn't answer. I'm going to raise that to maybe about 80, 90%. Okay. So now listen to me carefully. I was able to tell you right now that I could show you where 70%, if not more, of where all the buyers and sellers are. Now, remember, you're in a stock, right? Who the hell are you? Could you move the stock? If you could, then I'm not the right guy. But if you feel like you're just a peasant, I mean, you're just part of that crowd. You get shammed in there, with 100 deep. So if you want to know who's pushing the crowd, what is that worth to you? Okay, what is that worth? Would you pay $15 for that to see where 70% of the buyers and sellers are? Or would you rather use some indicator or some crystal ball? You want somebody that looks good behind a camera, that has a great infomercial and it's got 400,000 hits on YouTube. Listen, I'm talking from the horse's mouth. You want to make money, you got to follow the money. So let me tell you exactly what we got going on here. And by the way, if you go to what I'm about to show you too, when you guys get a chance, I'm just going to bring up this point right here. Right here on NASDAQ, right on our homepage or our website, and I'll have them posted the link up there. I was a regular guest at NASDAQ before they shut it down due to the coronavirus, okay? NASDAQ specifically wanted me to come there to educate publicly what is NASDAQ Total View, because they want you to know what's going on. And by the way, you think NASDAQ and exchange wants Fausto? Do you think they need me? No, but they see the value on it. They see somebody's actually talking about something that they want the general public to know. So let me show you how it works. What you got right here is you got buyers and you got sellers. The buyers are on the left. The sellers are on the right. Now, you're seeing this stock, American Airlines. Stock went from 25 all the way down to right around $24, right below 24. And then when it got around that close to that 24 price, the stock went right back up to 24.80. It took literally 30 minutes to drop literally over $1 and recovered less than all day long. In less than a half hour, the stock literally basically lost all that profit, but recovered. But why did it stop right at that number? Why did it stop right around that $24 price range? It wasn't a Fibonacci. It wasn't a MACD. It wasn't, President Trump or President Biden. Okay. It wasn't Congress. It wasn't Goldman Sachs. It was this. If you look right here on the left-hand side, you had over 250,000 shares looking to be bought at $23.83. You had another 159 orders out there around the world that make up 45,000 shares. And you got another 92 orders around the world that are traded on NASDAQ, make 66,000. I mean, if you do the math, if you could add, what is that, over 350,000 shares that are looking to be bought right below that $24 price range? Why else would that stock go up? Why else would it go up? Like, think about it. Do you really think the 1,000-share buyer that's over here, 23.97, is gonna push the stock up? Or would you rather look at this 250,000 share buyer at 23.83? It's almost like common sense. How many shares are you going to trade of American Airlines? Oh, but some of you can even afford to pay, even a $24 stock. They, oh, I can't afford it. I'll trade the options. Listen, you can't afford the stock. You can't afford to trade. Okay? So don't play a poor man playing a rich man's game. Follow the money. Because if you knew those buyers were out there and you were right with them, right above them, you would have bought a stock and you could have sell it right now and make yourself a nice 80 cents, 1,000 shares, $800. I don't know, $200,000 salary. Who doesn't want that job? I know it pays a hell of a lot more than Social Security. All right, let's look at another one. Stock goes from $35.50 in an hour, actually less, like 30 minutes, all the way up to about $36, like that, 50 cents, right? Then it stops. Dead, finished. Why? Why did the stock stop? Why did Pfizer stop? Okay. Does it have to do about the new coronavirus drug? Only one explanation. If you look over here on the right, resistance is made from sellers. Okay. And you could see right there, there's a 60,000 share seller sitting there at 36. You could sit there and you could pretend and you could believe anything you want to believe. But at the end of the day, the only reason why it came down and consistently did not want to go up, even up until 2:00 in the afternoon, right here, is because of that seller. That's it. Which, by the way, everything I show you, I'm going to show you live in my trading room. Okay? What better thing is that? Now, let's have a little fun. Okay? Let's have a little fun. I want to launch this poll. And I want you to tell me, we're looking at a stock called FCell. Could you tell me, is the stock going up or going down? From what you know about trading, is the stock going up or going down? Let's see how you answer this question. All right. I'm just waiting for everyone to answer. Bob, could you put it in the poll? Just put it in the poll. Okay. All right. We got a problem. Because I can't. Okay. Do you really think the stock's going up? If you really thought the trend of the stock was going up, I'm telling you, I don't know who put that in there, but you better quit trading. You literally, I mean, I don't understand why you even think, I've been doing this for years, and I don't know if people are just trying to like be, embarrass themselves, or they really don't know. But if you really was serious, and for the ones that said it was going down, congratulations, you just passed kindergarten of trading. But if you really thought it was going up, you should quit trading. I'm just helping you right now. Okay. All right. Now, for the ones that were correct and said it was going down, what do we need for the stock to go back up? What is going to make FCell go back up? Oh, Martin says because what's happening today. I didn't ask that. Okay, so then that only narrows it down to one person, Martin. Okay, so I'll give you a pass. Now, look what everyone's saying. Buyers. Oh, wow. So you're telling me you don't need support? You just said the magic word. You're right. Tony, you need demand. I'll give you that one. We need buyers. Oh, you don't need support. You need buyers. So this is the issue. Do you see buyers on a chart? Do you see buyers anywhere on a chart? No, you don't, right? Because the buyers are in the future. Support is the past. Do you want to trade the past or you want to trade the future? Okay. This is what I was taught. It's almost like common sense, right? So obviously the future. So let's go and check and see where the orders are. Now, if you look over here in FCell, there's a 102,000 share buyer at $9. There's 259 orders around the whole world. It could be you, it could be me, Mike, it could be Tony, it could be you, Haas, you, Marcel, you, William, you, Mike. Make up, I don't know, it could be a guy buying 10 shares, it could be buying 1,000, it could be 100, whatever it is. But out of that whole market, look at all the buyers, 400, 100, 800. That's just like, bam, 100,000 shares, $900,000 worth of stock is looking to be bought exactly at $9. So let's think about this for a second. In theory, what do you think is going to happen when the stock gets close to $9? Is it going to go up or is it going to go down? How do you figure that one out? Let's see how you guys answer that. Up or down? Well, remember, if it's something, buyers make a demand. Where you have a demand, that technically would make it a support level. So let's change the slide and look what happened. Soon as it got right close to that buyer right there, boom, program trading kick in. It ran from $9 and less than 30 minutes went right back to 10. Nice dollar, 1,000 shares, $1,000, $250,000 a year. Hell, if you just got half, 50 cents, $500, $100,000 salary. I know it definitely pays more than Social Security. I don't know anybody who gets to Social Security makes over $100,000 a year. Okay. So who doesn't want that job? Still want that stimulus check? Still want that second job? We'd rather sit at home, enjoy life, and just sit there and watch these guys, what they're doing. Because more and more today, people are trading. And the more trading we're getting, the more orders we're getting, the more icebergs we're getting. By the way, did I lose anybody? Is anyone confused? Anybody following along? Anybody lost? See? I didn't even teach you how to trade. Could you imagine if you were in my trading room? Could you imagine we took the time to show you this in detail in live markets? That's what I'm saying. Wait till you see everyone gets registered in the next few moments. Okay, so now, without using all that fancy charts and indicators and time and sales, all that, let's just look at this. Let's look at the raw data. Could you guys tell me where would resistance levels be on FEYE? Which, who cares what the stock symbol is, right? But if I own that stock right now, my game plan is I got to know where to sell it. Always got to have a game plan. Where is my resistance levels? Let's see how you guys answer. If you don't know the answer, give me a question mark. Okay, I'm give everyone a couple of seconds here. Some of you got to think about it for a second, huh? Well, I'll give you a little hint. And I'll draw some lines here. Resistance are sellers. You want to work your way down and you want to find out where are the big sellers. Well, 600's a lot. 1,200's more than 600. 4,000's more than 1,200. Oh, if you said 1,650, congratulations. That's where the biggest order is. So if you notice, 95% of what you're looking at these orders are garbage. All you are concerned about is that iceberg order right there at 96,000. So if I was seriously owning the stock, would I want to sell it now at 1690? No, I probably could squeeze out another 40 cents out of the stock. So let me just change the slide here and see what happens. What does this stock look like it's doing? Going up or down? What's the trend on this? That's right, up. Right, Doug? Right, Kevin? Renzo? So think about it. Where was the resistance level again? 1640. but the chart looks like it's going up, right? Anyone that looked at this, see, right now we're looking at the past. We just looked at the future, but majority of people are looking at the past. So while they're thinking about it's going higher, we already know it's going down. How? Listen, very simple. That's where the order was. And look what happened when it got to that 1650. It ran from 1650 right back down to 16. How many times, let me ask you something. Have any of you guys ever felt like you bought a stock and every time you buy it, the thing goes down, and every time you sell it, it goes up, and you feel like somebody's watching you? You ever feel that way? Anybody ever have that issue? Like, I can't believe it. As soon as I bought the damn thing, now it tanks on me all the time. Well, guess what? I'm going to break it down to you. It's not that they're watching you. You're not watching them. If you were watching them, it kind of would make sense. What I'm looking for is people of that, what you just witnessed, that could help me find these orders, because there's no software out there that does it for you. And what I'm looking for is I could teach people how to use this strategy so we all could trade together and find these iceberg orders and get out and high five each other and making a day's pay and then coming back the next day, because one person can't do it. There's a lot of stocks that are moving. We're scanning a lot of stocks and we're looking for these iceberg orders, just keeping it simple. So would you rather trade with, what the people on the floor are doing, or do you want to be like the average trader and do nothing? Because when you look at the floor of the New York Stock Exchange, you'll notice there's a lot of numbers on those TV screens up there. You notice there's no charts, no indicators, no nothing. It's all numbers. They're all following the orders. And that's what you have to do. Follow the money. Now, the next question people ask me is, when I buy a stock, where does my order go? Okay. So I always hear people always ask me, how do I know these orders are real? How do I know these orders are getting executed? Well, I'm an actual tape reader. And being a tape reader, basically what you're doing, you're reading the tape. You're following the orders. And these transactions that take place, this is where the chart gets its data from. So let me give you an example. Green are trades are going off on the offer. Red are trades are going off on the bid. So if you sold a stock, it's going to come up in red. If you buy a stock, it's going to come up in green. So let's look at these so-called fake orders people talk about. Looking at a stock, SDC, right? And we can see there's a big order right here around $26, right around there, okay? And there's about 44 orders out there. So in theory, if I was owning this stock, I would say immediately $12 is resistance levels. But when we go to the chart, we'll notice that it broke through 12 and it ran all the way to almost $14. How is that even possible? Well, I don't know if you know this, but somebody could really want those shares. I mean, someone could really want to buy them, right? So if somebody really wants to buy them, that is going to cause a huge chain reaction to stock to go higher. Why would anybody buy a stock other than he's knowing that it's going to go higher? And the only way we know he sold it is right there in time and sales. And look at all the green, 3,000, 2,000, 2,000, 3,000, 5,000, 1,000, 1,000. So that guy was basically kept selling it. So this is one of our indicators that we use, something called time and sales, that gives us a direction where the stock is going. It's as simple as that. So for everybody that's not using it, I know why you don't use it. Some people said it moves too fast. The bottom line is you got your defaults wrong. I mean, I don't know who taught you how to use it, but you pretty much got your defaults wrong. So that's where that comes in. Now, let's talk about level 4. Have any of you guys ever heard of level 4 before? Anybody heard level 4? Let me bring up one level 4 here. Let me bring up a stock that's moving up pretty decent here. Hold on. what we got here? The trading NEO in the trading room. Well, a couple of you because you're students. That's it. 4 people, 5 people out of 1,000, out of over 100 people in here. Okay. So let me show you what I mean here. Let me bring up something. Okay. This is a good one right here. Okay. So what we're looking at right here is level 4. Now, if you notice right here, you see this red line right here? See that right there? Right there, we're looking at a stock called NEO, NIEO. Now, let's load this up. And you could see that there was a very big buyer out here, and he was here for a while. When you look at it, it's been a while since he's been here. It's been over an hour. And the stock came down. So what would happen here is that this would be called a support level. But when you look at it, somebody bought it. I mean, sold it to them, and it dropped all the way down to here. And if you notice right here, there's a new red line that's coming in. See it right there? That's a new buyer, over 23,000 shares, which obviously makes support. And if you look up here, you see up here, this red line, 35,000 shares. The reason why the stock ran from 38.50 and stopped at 39 is because of this big seller. And guess what? He's still out there. You can't see this with level 3, but with level 4, you could. Think how much smarter and better trading decisions you would make if you were able to see those orders. See all those big block orders. You know what I'm saying? Like, think about that. It just makes things easier. You got to have a game plan. You got to know where your enemies are, right? You got to know when you fight your battles. But a lot of people are not doing that, and that's why they fail. So this is all new for me. It's turning my life around, Kevin. Well, you know what? Let me just share that because that's I'm really thankful. That's great to hear from Kevin. Barrett, Kevin, listen. I always tell everybody that I know a lot of you here have taken courses with other people, and sometimes it takes a couple of courses before you find the right person, and until you find it, because then all of a sudden it clicks. It's like a light bulb, you know? And like I told you, it shouldn't be complicated. If you see how simple it is, imagine what you'll see in the trading room. Because as a day trader, I also want to let you know, you don't got to make a lot of money to make this very successful. Look at Genius, the stock Genius. Stock goes from $5 to $8 in about an hour. You don't need to make $3. If you made 50 cents on 1,000 on a $5,000 investment, $500, $100,000. Like I said, you don't have to kill yourself to make a big day's pay on it. So everybody, just to give you a heads up and get back to what I was just mentioning to Kevin earlier, we all need mentors. We have some great presenters here. They all have their own strategy, but if something clicks, you should try a little bit of everybody's stuff. But you can't do this on your own. And you definitely can't do it, trading on your own. You have to learn from successful traders that have a good reputation, that have been around for a while, and most importantly, you explain it pretty simple so you catch it pretty easily. So, trading, great job. I love it. I spend more time with my family. I don't think I'd probably be married for over 25 years if I wasn't a day trader, because you know what? I have a better relationship with my family. I could come and go. I don't have to do this all day. It's a great job. You could do things you always want to do in life. You could travel. I mean, I got people in here that are on their, RVs. They're trading on the road all day. They love it. You don't have to worry about going in the office anymore. Everybody's trying to find the next best thing to do. How I make money on the internet. You are making this. I don't know. This is like trading on the internet, isn't it? It's not that hard. And you know what? It's not going out of business too. It's going to be here forever. So if you continue at Cyber Trade University, listen, just to let you guys know, we're endorsed by more brokerage firms than anyone in the industry. And if you're ever going to do business with anyone, make sure they are endorsed by brokerage firms, because they do their credit checks. They do their due diligence. Their compliance does it. They're not going to have CyberTrade University come do presentations in front of them if they thought we were teaching people how to lose money. And if you're going to do business with anyone, and let's say you don't want to do it with us, make sure they have been endorsed. So this is what I'm looking to do. I'm going to invite every single one of you to come to my original trading room, where we trade in pre-market, we trade in aftermarket, which is going to blow your socks off. We're going to do live commentary. You're going to learn from other traders. You're going to see things live, and you're going to get great audio. So before you start worrying about, do I got to open a brokerage account? I'm in a position right now. Just don't worry about that right now. Just jump in the room and just see if our traders, how they do it and what we're talking about. Let me show you level 3. Let me show you level 4. Let me show you how we find some stocks. Let me show you the professionalism. Let us show you the customer service of how we want you to succeed, because I'm telling you right now, it's not for everybody. And you know what? That's okay. That's okay. I tell everybody that all the time. It's a lot cheaper to watch and be in a room for an hour than going out there and just turning on the TV and buying something and making a mistake. It doesn't work that way. But this is what I'm asking for. I'm not asking for a lot of money, okay? I'm asking for $9. That's it. 9 stinking little dollars. And all I'm asking you is it's basically an application fee to get into the room. And you're going to get access into our cyber group room, our live daily market meetings, our morning and afternoon watch list. You're going to get your own personal education advisor, a crash course on day trading, also on swing trading. You're going to get all this stuff for a lousy $9. And guess what? If you're not happy, I'll give you $9 back after the end of the week. I at least want you to know the real truth, because I'm sick and tired of hearing people bashing that, saying, oh, you're going to lose all your money and this and that. I said, come in my room and see if people do make money doing it. What do you have to lose? And you know what? As a bonus, if you register right now, I will personally even talk to you on the phone and give you a coaching class for the first 20 people. So what do you have to lose? What do you have to lose? You have the greatest opportunity to do the career job that you always wanted to do. And you know what? If you've been doing it more than 30 to 60 days and you're still not making money, it's time to move on. But here you have an opportunity to see what it's all about, to meet people just like you and see if they make money doing it. Because you know what? If they're not, what's the worst thing happens? I give you $9 back. I just wanted to prove to you the facts and see if it really does work. But I can't invite anybody here to go to for free, because I don't know who you are, where you came from. We take this very seriously. So if you don't got $9, you obviously can't afford to trade. I mean, I'm just being honest. If you got $9 in your pocket, come in the trading room, and you know what? I'll give it back to you if you feel like it doesn't work out, if you think we're wasting your time. So does anybody have any questions? We got the new presenter coming up. I got Larry Ganza comes up, a very great presenter. He's been with us for many, many years. We haven't had him in a while, but he's going to be coming up next. But does anyone have any other questions? Any other questions? When you start, well, I will personally start on Monday. What I'm saying, you start tomorrow, for crying out loud. If you can get an appointment, start tomorrow. Don't let anything, because you know what, you kind of forget things after the next day. You're like, what did I sign up for? You know what I mean? Like, if it's fresh in your mind, do it now, and get it, and book your appointments, do the walkthrough, do all that stuff. All right. Yes, you could start whenever's convenient for you also. Absolutely. Monday's good for me, Haas. Good. You got nothing to lose. All right. So listen, guys, I'm going to give you guys about 10 minutes. We're going to come back. We want you to hit the restrooms. And then we're going to bring Larry Gantz, going to start here at 2:00. So in the meantime, don't go anywhere. If you have any questions, we'll sit in the room and we'll answer those questions, but I'll be right back. And then we'll have Larry come in, step in, and then we have 2 presenters to pick up where we left off. So don't go anywhere, everybody. Thanks for listening, and we'll be right back.
president of Cyber Trading University. We're going to take a look at how traders are using Total View. And Fausto, could not be a better time to have you in with us at Marketplace, because with everything going on, the volatility we've seen in the market since you were with us in the middle of February last time.
That was pretty crazy.
Traders are asking themselves, what's the bottom, what's the top? But as a day trader, you can kind of get an inside look when you're looking at a single stock.
Yeah, what is, Jill, is that, thanks for having me again. And yes, when it comes to day trading, people realize that what happens over the course of the day, which trickles down to a swing trade and to a long-term investment. And my phone's been blowing up. People could ask me, Fausto, is this the bottom? Is this the bottom? Because we're looking at the market all day. And honestly, this is how you really know when it's the bottom. When you have the worst of the worst of the worst news and just constantly all negative stuff, and the market's not going any lower, that's when you know it's time to buy. So as you see, like a lot of bad news keeps coming up, and obviously what happened yesterday when they lowered the Fed rate by a half, it took for a big decline, and all of a sudden the market's up with about almost like 900 points so far. So and there's still a lot of bad news that's coming out with the coronavirus and everything else, but that's really when you know when you hit the bottom. So for some of the listeners out there that really missed the boat when the market had a big rally, you almost hit 30,000. You know, these are the opportunities. You know, honestly, this is like the same thing I saw back in 2008 when we had the financial crisis. So once you start seeing all the bad news, things start backing up. Well, start going up.
All right, let's take a look at our example here today. We're going to look at ticker symbol MRNA, Nasdaq listed, of course. What are we looking at? Where's the level that you're looking to sell? Okay, so listen, what is mRNA? You know, I keep bringing up stocks, and people are like, what is this company? It doesn't matter. We're just here to make money. The main goal about Total View is you have to understand how it works, how to know where the buyers and sellers are. It's all about supply and demand. That's why it's such a great tool. So we're looking at a chart right here, and we're looking at the stock right here. And the first thing people notice is like the stock's going up beautifully. Nice. Look at this stock. Started this morning. It's at 25.80. It's at 28. Is it going higher? Now the goal is, why does the stock keep breaking out? It hits a resistance, it comes back down. It breaks the previous resistance, keeps going up. How do you know it's going to keep breaking higher highs? And that what we're going to do this time is we're going to bring a video so you all can see exactly what it's like to see in the real market conditions. All right, so let's move on to our next slide here. That's exactly what we're doing. Let's take a look at Total View. I'm going to let you take the reins. Tell us what's happening here.
Okay, so we got like a little minute video here. So we're looking at some real time, and the key here is time and sales. These are the transactions that are taking place. We're looking at level 2. Level 2 is basically people get for free, but it doesn't give you the depth of data as Total View does. Now, the key here is that you don't see that many sellers out there. You're just seeing the best bid and best offer of that exchange. But you'll notice how the stock keeps going higher. What we need to focus on is where you see the big sellers. And you're looking for big orders. You got 51 different orders out there, right around 20, 28. Things going so quickly, I try to slow it down. So right around $28, $28.50. So that is really your resistance level. So when you're looking at a stock going out, going higher, you're going to say, is this stock going to break out? So you see it's coming up to this guy right here really quickly. You see it's coming up. It's coming up to this person right here. It's 70,000 shares, 5,000 shares. So it's going to come up to that seller. Now the goal is this: is that guy going to get executed? Remember, you have 100 share sellers, 300 shares, 1,000. You have a big order out there. You want to see if that guy gets executed. And you want to see if that's how it breaks out. Remember, what makes support and resistance levels is buyers and sellers. So you got a seller out there. So we're coming up to that seller right here. Now the goal is to look right here and see if that seller gets executed. And you see it's coming up to the seller, and boom, the guy gets taken out. It's actually executing it. Boom, 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 boom. Look at that. See all those trades actions? It took the guy out. Now look how fast the stock goes up. From 250, we're at 260, 270, 280, boom, like that, as quickly as that. That's why it's so important to know where the orders are, know where the resistance, and see if the guy gets taken out. Now, when we get to the next slide, look at it. We're already at 28.80.
Yep, and you can see you start seeing 35,000.
Which orders. Is exactly. Now, this is the next order. Now, the next question is: here's the next biggest resistance. There's a 33,000 shares for there's 100 different orders out there. Now, then that's where the next resistance level is. So the goal is you hit a resistance. Where's the next resistance? The next resistance is the next biggest seller. So now we're coming up to him, and we're going to see what's going to happen when he gets to 29.
Yeah, I mean, it happens so fast.
Well, also, this is about a 5-minute video that I was able to capture when we traded this stock, and I kind of speeded it up over about a minute. So it doesn't move as quickly. Boom, we hit 29. The guy got taken out again, and look at the stock just took off again. And the thing I want to explain to you, Jill, is that, and your listeners have to understand, is that when you have a big seller out there and that guy gets taken out, that is a very big demand. Someone says, oh, wow, I'll take that 30,000 shares. And that's why you get the stock that really, really starts to take off. Now, the next thing is that you're going to get some resistance levels. It's going to start backing off. There's always profit taking going on, right? So when you have profit taking going on, you can see profit taking going on. But the question is it really a profit taking, or is it just people just, or is it really going to go lower? In this case, it's not. Seller got done. Remember, we just watched the stock go from 28 to 29. Now look at it. We're at 29.50 already. Stock just keeps going higher and higher because those sellers are getting executed. As those sellers get executed, that means there's a demand for it. When you see big block orders out there, it makes a bigger demand, and that makes it higher. Now, the next resistance level obviously is going to be where we have to focus on where the next biggest orders are. So we got some, I think we freeze, right? We're done?
Nope, we have a little bit more to go here.
We slow down over here. Yep, we're done. So the next video we're going to show.
You have to go to our slide here. So this is where you're looking at those levels.
Right. So we're looking at the seller. So we have a 67,000 share seller at 28. So now we have to look what we call iceberg orders.
What does that mean?
Okay. So it's a funny story. So I came up with this word about 20 years ago after watching the movie The Titanic. Okay. I should go watch that movie. Very sad movie. I definitely don't recommend it. So anyway, what happened to Titanic? It hit an iceberg. And the thing is, everybody was focused on the pretty of the ship and above the water. They didn't realize it's not what's above the water, it's the bottom of the water. Icebergs are really big. So what happened, it crashed and it sunk. So what we're looking for is big iceberg orders, which we call, some people call them big block orders, but when you see a big order, it's called an iceberg order. So now we're looking at a 28.90 and we're looking for a resistance. Once again, stocks going higher, we need to focus on the next resistance level.
All right, which is on the next chart here. We take a look. Yep.
So here's just a quick little screenshot. So as we're looking at it, you see, it's a lot easier when you're focusing on, when you're just looking at the level of the total view, and it's easy to point it out. Now, please keep in mind, your listeners have to understand, we're fast forwarding this pretty quickly to get to the point. It doesn't move this quickly. But I'm showing right here, it's the quick screenshot. What we're focusing on is this big order right here for 73,000 shares, and there's 315 different orders out there making up that 73,000. Now, the thing I just want to point out is I just want to teach everyone a quick little lesson.
Yeah.
Don't ever sell anything at $30. Go out at $29.99. You just cut the line by.
So that's for anything that's at an even number.
Biggest trick I was taught by my mentors when I was younger is, listen, everybody's going to think 30. Everybody's going to think 20. Go out $21.99. You just cut the line by 73,000 shares. That's a very good.
It's like selling a house or buying a house. It's like that, those incremental psychological levels.
Well, if you remember, if you look at it, the stock has a penny intervals. So that's a little tip. But the thing is, let's focus what happens to the 30. Just right off the bat, that's a major resistance level, and that's what you have to focus on. That's for the stock to go any higher, it's got to get through that 73,000 share seller on total view.
All right, well, let's take a look at that next slide. See what happens next. Now we're going to get the other piece of the trade.
Okay, so here we're looking at the stock moving. Here's 29.45, 29.48, 62, 67. So the sellers are getting executed. You can see the transactions taking place, but we know that there's that guy sitting right here. And now his order's coming up. Look, he's starting making up the ranking. It's getting up to 30. It's getting close to him. So let's watch what happens. 74, 70. Look at the transactions taking place. It's trying to get there. And by the way, those orders, they're all real. People think like they're fake. Those are real orders. Can a guy cancel it? Of course they can cancel it. But that you have to take very seriously, and that's a real order out there. So now as we're looking at it, and as it's trading, it's trying to get there. Actually, it kind of almost tested it. You see that right there? See that candle right there? It hit it, and now it's starting to back off a little. Now you're starting to see the red candlesticks. So now it means that the last sale is lower than the previous.
And this works for all kinds of stocks. ETFs, would it work for ETFs also?
ETFs, futures, it works the same way. Remember, it's the movement of stock that makes all those other things. Yeah, right. ETFs and everything else. You can look up any ETF and they'll come up on total view. Look, now we're down to 29.
Yeah.
So my point that I'm getting to is this: if you didn't have a game plan, Jill, and didn't know that seller was out there, and you try to
and actually, if we go to the next slide, this is exactly what you were talking about. There's your level right there.
If you didn't have a game plan and knew that seller was out there, and look at that candle, that stock literally moved. Look how fast it moved in that one bar chart. If you didn't have a game plan to get out there before that guy was out there, and if you didn't what we call shaving, if you didn't shave just before that 30 and cut that line, guess what? You would just look how much money you would have lost. That stock didn't even drop from 30. Look where it went to. Wow. 730. You got crushed on that trade, because what happens if that seller's out there and he's not getting executed? He really had to sell that order, Jill. How is he going to get out? He's got to sell to the buyers. If he hits the bid, he's running that stock down, not you and I. Remember, we're not trading 74,000. Someone else is, but
And it's not one person. We saw it. It was like there was several people out there doing it. And that's how you got to focus on using the total view when you trade in today's volatile markets. All right. So cool to actually watch it happen in real time. Thanks so much for doing that for us, Fausto. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.
All right, everybody, welcome back. So hopefully everybody enjoyed that quick little video, and wanted to just give you something to watch while you're sitting around for about 30 minutes, a couple of minutes before we bring Larry Gans. So let me bring Larry Gans back into here. So listen, really quick, we got 2 more presenters, and just want to kind of just let everybody know who Larry Gans is. Larry's been with CyberTradingu University, has presented for us. Geez, I think it's going to several years. I think I've going back since 2015. So he's very, very well known in the industry. He's been involved in trading, brokering commodities and financial markets over 30 years. His trading group is one of the first to trade over-the-counter options and cargoes in foreign crude oil. We all see what's happening with oil too. He followed a passion to teach others, just like we all are. But his passion is to help trade in the options. So he launched his powercycletrading.com back in 2009. His approach is to trade low risk, disciplined approach through price cycle trading systems. So Larry's going to come in. He's going to show you a little bit more about it. And like I said, if you have any questions, feel free to ask him in the chat room. So Larry, thanks for coming back here again, and the stage is all yours.
Thank you very much, Fausto. Let me get things set up here. Okay, can everybody see this screen okay? All right.
Yep, you see everything fine.
Okay, great. So let's get rolling. Let me make sure I've got my chat area up. So if anybody asks a question, I can see those. 1 second here. All right. Okay, good to go. Well, again, thanks for having me here, Fausto. And what I'm going to talk about today are ways to trade what I call uncertain markets or extreme market volatility. And we're going to focus here on 2 really amazing low risk, high return option strategies that I like to use for any kind of market environment. They're exceptionally good though when you're getting into a lot of market uncertainty where the next headline could, sabotage whatever trades you're working on. So let's get started. So the following presentation is purely for educational purposes. Any stocks, options, or futures mentioned does not constitute advice and should not be construed as a recommendation. Now, to me, the secret to trading profits overall comes down to direction, timing, and then options for your risk management, or sometimes what we refer to as opportunistic risk management, because when you use options, you've got so many different things that you can do, or options to turn a trade into a neutral trade, or even flip a trade from long to short or short to long. So it gives you a really great amount of flexibility in your trading. Now, option trading, though, has many more advantages than just trading outright stocks, but as you probably know, can be a bit more complicated as well. But once you understand the benefits and the advantages of options, and especially option spreads, you're really going to never look back. So when used correctly, option spreads are going to really help you to provide your trades more defined trading risk. It's going to lower your capital at risk, going to provide you greater trading leverage on your trades, and they're going to offer you an unmatched hedging advantage for your trades, your portfolio, or stock specific. Now, I've been trading options for over 30 years, and I've found that the most valuable go-to option strategies out there that can literally help any trader more than any other trading strategies known, and especially when we come into times of extreme market uncertainty, are to use and incorporate in your trading the option butterfly and the long condor. So I kind of call it my trading secret weapon. Now, the huge advantage that these 2 strategies have is their unique option framework that's designed to take advantage of time decay and volatility. These are the 2 main pricing components of an option. And so what it does, it helps to stack the trading odds in your favor. And these can be used in any type of market environment, but they're really exceptional when you get into really more uncertain market kind of trading environments where you're not sure from one day to the next what the market's going to do. Now, the great advantage is because you can structure these trades where you only require a small amount of your hard-earned trading capital. And so your trading returns will be then greater, and your trading stress is going to be really reduced by having that lower capital at risk on your trades. And to me, that's always a major win-win situation. Now, when we look at the butterflies and the long condors, they're also very dynamic, and they can be traded for a variety of different reasons with different goals in mind. So in other words, you can learn how to use or trade the butterflies and long condors, and you're going to be covered for both your offense and defense of a trade, so goals and protection. So we can structure them in a lot of different ways to help us, like I said, in a lot of different environment or conditions that we're trading in. Now, these two strategies, they can work no matter what the markets are doing as far as a market cycle. So you could be in an uptrend, downtrend, or even more of a sideways price action. And they can really help to provide income from stocks that are going nowhere. Will help to really eliminate the stress of having to be perfect on a stock's direction or overall market direction. Will eliminate the time decay expense that you're going to encounter from long decaying options. It's going to really help you to take the unsettling guesswork out of your trading in general. And these can be structured at a very low cost or low capital at risk for your trades. And as you're going to see ahead, you can get returns of 10 to 1 or higher, kind of reward to risk type of setups. Now, butterflies and condors are also very flexible, as you're going to see ahead. So I'm going to show you a lot of different trade examples. But once you learn then the fundamental setup and then of how they work, you can then adapt these option strategies for your goals and your market insights. So, you know, they can be structured for a more delta neutral or neutral type of sideways trading market. But to me, the real beauty is that they can be used for your directional trading. So offering you either a bullish or bearish exposure to a market when you feel pretty sure on a stock's direction where it's headed one way or the other. But the thing that's great is that if you are wrong, the butterfly and the long condor are going to really help you to manage your risk, but at the same time are going to help you retain a large potential return on that trade setup. And that's always a win-win situation. Now, when we look at these two strategies, let's kind of be real though. These are option spreads, so they're going to offer you kind of a limited and not an unlimited profit potential. But what I like about them is they're usually going to always cost you a lot less than if you're going to buy an outright option, and they're going to offer you an amazing risk reward trade setup. So what this means is that the butterflies and long condors can really significantly increase the probability of your winning trades, but at the same time reducing your risk for those trades. And that's what it's all about. So, the current market, we've kind of been flipping and gyrating up and down in a lot of kind of whippy price action. So one day you might have a trade that looks really good, and the next day it's going the opposite way. So with that kind of condition of uncertainty, these two strategies can really then be a popular way to go because you can structure them to really reduce the risk in the trade. Now, the other thing, when you look at these two strategies, they can be used for hedging when you mess things up. Not that anybody here ever messes a trade up, but they can be used as what I call a fast, low-cost way to cover your pronto when a position starts to move against you. And I've literally found no other way to hedge or any other hedging strategy that even comes close to using these two option strategies. Now, by constructing either a butterfly or a long condor around a strike that is under pressure from another core trade, such as if you do credit spreads or say you did a debit spread, this can really become one of the best ways and the fastest way I've found to immediately neutralize, but not only neutralize your risk, but you can lower your risk. Now, if anybody here, probably a lot of you have done credit spreads, this is a kind of a situation that happens to a lot of people that do credit spreads, myself included. You'll have a credit spread on and it looks really good. You sold it way out of the money you thought. And so you didn't expect your short strike to ever get hit. But you come in one day and you get a gap up and the price is right through your short strike and your trade is going against you. So you've had, really great success with credit spreads. We call them probability trades, but you have that one trade or whatever that can really sabotage all your other profits. Now, what you can do though, is this is probably one of the only strategies I've found where you can actually neutralize that risk on a credit spread by doing what we call a butterfly hedge on it. So it becomes a great way to neutralize and reduce your risk. And then you can kind of regroup, see what's going to happen. Then you can leg out if you need to. So this was, from Pam. Once she learned that, she said, wish I'd known how to do this hedging before I lost so much money doing credit spreads. And that's really so true. Now, when we look at hedging, these can be great strategies for hedging an original position or a core position. So all you really have to do is just put on a butterfly construction or a long condor hedge on the original position that you had set up. So what it does, if let's say you had a debit spread or credit spread, you can build a butterfly or condor around that. So what the strategy does, it takes advantage of the time decay element or component of the option while you wait. And many times that's really all you need. A lot of times, you just need a little bit more time for that original position to stabilize. So, in an uncertain market, you'll have everything's kind of trending, your trade looks great. And then some headline or something comes out and it totally, stalls the trade out, the momentum of it. And that trade maybe backs off. And then you're left with a decision. Do you stop yourself out? And a lot of times you stop out and then you'll see the next day it continues back in the right direction. So what I found is a lot of times we can put this hedge on that core trade and it gives us time to wait it out. And then we can see what happens and we can then, leg out of the trade and do a lot of different things, but it buys you that time. And also you're getting paid while you wait. So a lot of times this can actually reduce and adjust your trade costs down. So at that point, you just, you can lift the hedge and stick with the original trade, ride it for what it's worth. Now, when we look at the butterfly, they're kind of a simplistic structure. So I'll go through kind of the basics of a butterfly. So here's let's say a call debit spread. And so here where my pointer's set. So let's say you're long a call here and short a call. And your risk then is your debit paid of, in this example, $300. So, this is a fine risk trade, which is great, but I never want to lose my full at risk on my capital. So we could easily neutralize this and actually reduce this risk by converting it to a butterfly. So what we could do is we could sell a credit spread, a call credit spread against this. And in this situation, receive $200 for the credit spread that we sold. And then by doing that, we just reduced our risk from $300 to $100 by making this conversion into a butterfly. So we were long a call debit spread here, and then we sold another call credit spread up here, sharing the same short strike. And now we've neutralized and reduced our risk down to $100, but we still have potential for a good profit if it stays in this profit zone. And if it goes out at the top of the tent, we call it the profit tent, you could make your max profit and actually have a bigger return on that lowered capital at risk. So this is just one kind of aspect of it, but that's the simplicity of it. So that vertical credit spread and a vertical debit spread combination. Now the other thing that I really like is, and we use a lot of long condors at Power Cycle Trading because with this strategy it's very similar to the butterfly, but we can widen out the profit zone. So the butterfly, you've got to kind of really thread the needle to make your maximum profit. But with the condor, we can widen this out. So rather than having the same short strike as a butterfly, we can widen this structure out and have a bigger zone of profit. So I love this as kind of a go-to hedge first usually, or a lot of times what we'll do is we might have a long call debit spread or put debit spread, and then we'll convert it to a condor to reduce that risk. And the other thing it does is it increase, if you're trading options, you know how theta or time decay can really hurt long options. So this will, most of the time you can convert your trade into a positive theta trade by, doing this conversion. So another really great strategy. So they're kind of similar to a lot of degree, but this one is a little different because it widens that profit zone out, which is really great. Now, the core concepts that make the butterfly and the long condor dynamic, let's kind of dive into that, comes down to option pricing. So when we look at options for profit generation or just from a standpoint for income, when we look at using the butterfly and long condor, these two strategies really come down to understanding how option pricing works. And when you break down what an option price is made up of, the core component is time decay. All right, so option price is made up of time and volatility, but that time decay component is really a big factor to the price of an option. And it's one that we can take advantage of when we use the butterfly or long condor, because it has a selling component, which basically is selling time, and we're collecting that, that time decay premium. So let's take a kind of a review of this. Now, what theta does, it tells us how much an option price will go down over time. And that's the rate of the time decay of your stock's option. Now, time decay occurs because that extrinsic value or the time value of that option, it goes down. And as expiration draws near, it really accelerates. And at expiration day, it's zero. So, it's a decaying part of the component of your option trade. And at the end of the expiration period, it'll be at zero. And that's what we take advantage of when we structure a butterfly or long condor. Now, by looking at the butterfly long condor, you can see the construction. We'll go through a bunch of examples here to kind of show you visually how they work. And when we look at a butterfly spread, here's the kind of the basic makeup of it. So let's say we have this XYZ company that's trading at $45. And we're looking for a directional move down. And in this example, I said, okay, we're going to move it. It's going to go down to 43. So we just, not a big move, but so we can structure these for big moves or small moves. But here we're saying a move down to $43 is our target. So one thing also, whenever you do a trade, I use kind of a 7-step trading process or steps. And one of the steps is to always have a profit target before you ever put on a trade. And typically what I'll use for profit targets, I typically will use Fibonacci levels and then support resistance levels, maybe based on moving averages and price support. So in this example, we're looking for a trade down to a target of 43. So with the butterfly, this is one thing we can do directionally. We can target 43, and typically what we'll do is we'll have that as the body of the butterfly. So if you look at this example, this would be buying a March 44 put, paying $2.38 or $238, and then we're going to sell a March 43 put below that, bring in $1.67, and then we're going to sell another 43 put, bring in another $1.67, and then buy below that the 42 put at $1.06. So when you go through the math here, you add it all up, you've got your total cost of this trade, which is your risk, the debit paid, is $2.38 for that 44 put, $1.06 for the 42 put, and then you get the credit from selling those two 43 puts, $1.67 times 100 to make it into an option contract. The risk on this trade, if you did one butterfly, is $10 per spread. Now you can see the body, the butterfly gets its name from the body here is your short strikes. And that's typically what we'll do with the target. And then your legs are long. Okay. So your long is, it's a long put butterfly in this example. Now your profit, you just look at the strikes and you look at the width of the strike. So 44, 43, you've got $1 or 43, 42. So $1 or $100 wide. So you take that, your dollar wide spread less your cost of your trade. So in this example, you could theoretically make 90 cents or $90 per option spread if it nailed right at expiration at 43. So you can see that this is a huge potential reward to risk of 900%. So you're risking $1 to make 9, and that's very typical of the butterfly and also the long condor. Now, of all the option spreads strategies, this one by far will give you the highest return on your risk of any option strategy out there, other than if you just go long calls or something. But you can literally get returns of 10 to 1 or higher by using this structure. So we'll go through some examples so you'll see exactly how that is possible. Now, let's take a look at how to choose the best butterfly or long condor. And then you can kind of select maybe which one might, kind of align with your trading goals. So in my opinion, one major goal for traders is that you should look to select trades that are going to be based on what's going to provide you the most consistent positive returns over your trading career, let's say, with low defined risk and not always that greatest home run hit. So to me, it's like, I always look at the risk first, and then I look at the return on that risk. So I kind of go backwards on it. So to me, the most important thing is what is the risk? So I know what that is going into the trade, and then I know the return on that risk. And if that's acceptable, then, you can go for the trade. Now, one of the best ways then to achieve, maybe your trading goals of what strategies to use is to understand what option strategies are out there and available. Understand, how they work, and then select the one that's going to be best suited for the market environment you're trading and your specific trading goals. So, everybody here today is going to be, trading a different capital account, amount. So, Susan might have 100,000 trading account, that she can trade with, and John might only have a $5,000 account. So it makes a difference on how you trade. But the one thing you'll understand and find out is if you understand these two strategies, these can be used for literally any account size. You can have a hedge fund account with hundreds of millions and do these strategies, or you can be a small retail trader like ourselves and maybe have a $2,000 or $3,000 account and still have great success doing these trades because they're very low capital at risk type trade structures. So let's take a look at what I call the butterfly family. And, the basic component or the basic things that are in common with the butterfly, the different variations in the condor is the long condors, that they have a selling component to the trade. So you not only do you have a long component, which gives you that accelerator or better return from the leverage, but you also have a selling component, which will take advantage of, collecting premium and time decay. And then that's going to reduce your trading risk, but also is going to reduce your, what we call that theta decay. So when we look at the different variations, there's the long call or put butterfly. So we can structure butterflies with calls or puts. We can do what we call a broken wing or butterfly using calls or puts. Sometimes it's referred to as a skip strike butterfly. So it just kind of reduces the cost of the trade to one direction. The other variation is what I call the ninja, which is an unbalanced or ratio butterfly, which is another way to reduce your trading risk to one direction and still have really great returns. Then we have what we call the iron butterfly, really great for selling volatility. And then we've got another category, which is a big category, is hedging. How to utilize the butterfly for trading defense for trades that are, under pressure from, a directional change, something like that. And then the other category is using the long condor option spread strategy, which is very similar to the butterfly, but widens out your profit zone. So it's a really a lot of great variations that you can get from these different strategies. So let's go through and look at different trade examples so you can get a better idea of how these can maybe fit into your trading plan. So first, let's take a look at a lot of different variations and examples of the butterfly itself. Now, when we look at the butterfly spread, the other really great thing or cool thing is that we can adjust the risk and the profit of your butterfly spread by the wingspan of the spread. So, think about if you were actually a butterfly collector, the easiest way for you to catch a butterfly would be with a big wide net, right? Versus a small net. So with the butterfly, we can adjust the potential profit zone or profit area by widening the butterfly, the wings of the butterfly. So we can do a really wide butterfly and give ourselves a bigger profit zone. Now that's going to increase the risk or the capital cost, but we're going to get a good profit zone for that trade. Now, if we really want to keep the risk super, super low, but still have an unbelievable return on that lowered risk, we can narrow in the wings of the butterfly and make it a very low cost capital trade setup. So we'll take a look at these different variations so you can get an idea. So here's the first one we'll go through. And this is the other with butterflies are great for the ETFs and index options. So we'll use the butterfly a lot for, ETFs like SPY or QQQ or the Russell IWM, or you can use it on a kind of a larger contract, the SPX or the NDX or the RUT. So they're great for the index options, for ETFs, and great for stocks in general. So this is an example of a narrowing butterfly on the ETF SPY. So a spread width of $100. So if you look at this trade setup, first, it's a directional trade. So first off, we've got our fib levels. So we've got this swing high to low here. And now that establishes our different Fibonacci levels, which are then I use for targets. So in this example, we were targeting this kind of 618 level right here, which was coming in at 273, 274. So that's a really good target. Plus there was a lot of option activity here. So it gave us a great target. So SPY was trading right about here at 267 where my pointer is. And we were looking for a move to 273. So we structured this with a very narrow butterfly to give it very low capital at risk on the trade setup. Now our price target was here at 273. So let's take a look. So this was using calls for an upside move. So we bought the 272 call and sold the 273. So we were targeting that 273 short strike there. That was our target. Now you'll see here, that's a 272.73. That looks like a call debit spread, right? And it's $1 wide. And then we sold the 273.74 against it at the same time. You can leg into these too, which are great. And that's $1 wide spread. So you can see your spread width here is $1 or $100, and the cost of the trade is 10. So you can see over here where my pointer is, the debit cost here was 10 cents. So super low. That's the most you would lose if you did one spread and you got it wrong, totally wrong, could not adjust it. You would lose to $10. Now your theoretical profit is your spread width here of $100 less your cost. So theoretically, you can make $90 per spread if it goes out at expiration at 273. Now with the butterfly, you'll never make it exactly your max profit because you've got to thread that needle. So there'll always be a little bit off, but they're very close. So you can see in this example, this trade over 2 days made $70. But so that might sound like a lot of money. It might not sound like much money, but when you look at the return on $10, that's a 700% return. So you did one option contract, you made $70. If you did 10, you made, 700, but your risk was, only $10 or $100 if you did 10, right? So super low way to trade as far as, keeping your risk under control. And what I've found is super helpful when you're in a market of high uncertainty, because you want to keep that risk low because you never know what's going to, pop up next to sabotage your original trade. So here you can see it's going out. This is that profit zone or the profit tent. It's going right out right here, almost the top, but not perfect. And that purple area is where it is in time. So we can use our analytics here and we can get a good, you can, kind of use that to tell you what it's doing at any point in time. But here you can see it's going out on the day of expiration on the 16th, and it's trading right here at 273.08. So very, very close. So it's up $70 per spread. And so you can see here where my pointer went from 10 cents or $10 to $80. So there's your profit of 70 per spread, which is 700% return. So in this example, we had 4 contracts. And so that was over $280. So very low defined risk trade. And it takes advantage of the time decay, volatility decay, which both of these pricing components go to 0 at expiration. That's what really makes the butterfly very, very attractive as you hold it into an expiration, and you get these super high returns on that very low capital at risk. Now, here's another example of using a butterfly. So in this market, it's been hard to short, so we found that by using a butterfly spread for shorting, we can really reduce our risk. And if we do get it wrong, we can short the market on very low capital at risk. So here's a short trade that we did using the SPY, and this spread width is $500 or $5. So with this, again, using, targets, we had SPY was trading at 392 or 393, right about in here. And we were looking for it to pull back, and we were looking for a target down to about 387, right down in this area here. Okay, so that was kind of our target zone. So we weren't looking for a huge move, but we could structure a trade where we could take advantage of any kind of pullback, even if it's a small pullback, and make a really good profit on the return based on the low capital that we put up. But if we're wrong, we're not going to lose much money. So here's the trade set up for a short trade. And the other thing, what we'll a lot of times do, like we did today, we went short the QQQ, and if I have time, I'll show you the trade. We set up the trade using a put debit spread. And then what we'll do is maybe later we'll convert it to either a butterfly or condor. I can show you real quick here. So what we did this morning in our trade room, we did we're looking for a break potentially lower, and it could go a lot lower if we break 308 on the QQQ. So we did a put debit spread. So we bought the April 1 series 309, 305 put debit spread at $1.29. So it's up a little bit right now. But what we can do then, what I typically will look to do is if we get a bigger flush to the downside, we can hedge it out and reduce the risk in our theta decay by selling a bull put credit spread against it. So converting it to a butterfly or a put condor. So if I have time, I'll go through that with you in a minute. But here is the example. So in this trade example, We bought the 390 put, sold the 385, okay, put debit spread, and then sold the 385, bought the 380. Okay, that's a bull put credit spread if you put those two verticals together. Now look at the spread width. It's $5 between each strike, so that's $500. But look at the capital at risk, 50 cents or $50. That's the maximum risk on the trade. So if you totally got it wrong and you didn't adjust, typically we can do other adjustments to reduce that even more. But if you did nothing else, you would risk only $500 or $50 per spread. Your potential profit's $450, okay, the spread width less the cost of the trade, and that's a 900% return. All right, so you risk $1 to make $9. That's the potential of the trade. Now, 2 days later, we had a profit of $86 per spread, and that was fine. I mean, we knew it was going to be hard to short, but we took the risk to short, and we had low risk, so it made 86 per spread. But on that risk of $50, that's 172% return. Now, theoretically, it could have made a lot more, but this is a great way to trade if you're, in a market where things are whipping around really fast, up or down. So here's the profit zone here. You can see that big profit zone. We've got a pretty wide butterfly here to kind of give us a bigger, wider profit zone. And it was going out here on the 18th, 2 days later, right here, almost out, but still inside. So it went from $50 to $136, and that's that profit of 86 on the risk of 50, 172% return. So take those kind of returns all day long, and especially when we look at the risk first of $50. All right, so that's a really good example there. Now, the other thing that really gives you a great advantage if you're wanting to trade higher priced stocks, so like an Amazon or a Tesla or even GameStop, you can do these types of trades on a lot lower defined risk by using a butterfly. So I'll show you the advantage here. Now here's here's a trade setup that we had on Amazon. So we did this with a really wide wing butterfly to give us a big profit zone. By doing this though, we were able to trade Amazon to the long side or short side if you wanted on very little capital. All right, so we did this with a $30 wide spread, which would be $3,000 wide. All right, so we'll go through the trade setup here first. So it was trading, Amazon was trading right here about 31.50, and we were looking for a move up towards 3,200. So there was a lot of option activity here and price action resistance. So that was our target. So we have the target there. So we structured a trade targeting 3,200. Now here's the great thing with using this option strategy is let's say that you wanted to play Amazon to the long side. So you went out and you bought 100 shares. Okay, so we'll relate this to 100 shares because one option contract is equivalent to 100 shares. So let's say you wanted to go long, Amazon, and you were targeting 3,200. So you bought 100 shares at $3,150. So you're putting out $315,000 to buy that 100 shares, right? That's a lot of capital. That's a lot of risk. And if you got it right though, and it did hit your 3,200 target, that's going to be $50 a share. That would be 2.33% return on that risk. But to me, that would be a huge amount of risk. But we could do the same kind of target trade with the butterfly. So here's the trade setup. So this was buying the 31.90 call, selling the 32.20. So you can see that it's $30 wide between these two strikes, right? Now, then the next thing is you're selling the 32.20, buying the 32.50. Okay, so $30 wide. So that would be $3,000 per option spread. Now the risk on this trade, though, you're setting this trade up for only a maximum amount of risk of $388. That's the debit paid. So in this example, you're paying out $388 per one contract, or that'd be equivalent to 100 shares versus $315,000. Now your potential here is to make 2,612 if you nailed it perfectly, which we would never think we could, but that's theoretically what it would make. And that would be a 673% return. So you're risking $1 to make almost $7, versus here, you're risking $315,000 and you make 2.33% return. So very, very, not even comparable, but that's the beauty of it. Now, here it is going out within our profit zone on the 27th, 2 days later. And so it's trading right here at 32.10, just a little bit over the target. but that's fine because we're going to just go ahead and nail it, take it off. We're not going to wait around to expiration. We're just going to go ahead and take that profit. So here it is. It went from $388 or $388 up to $1,426, or that'd be $1,426 per one spread. And so this is a profit of $1,038 if you did one butterfly, or a 267% return on this trade structure versus if you bought the shares and you made 2.33%. So that's another great advantage of the butterfly. Now, here's another really good one to show you. This is also on Amazon. So these are, Amazon's a great one for some of these butterfly spreads. But here's to show you how you can use this. And this is another great advantage. This is $1 wide or $1,000 wide. So I'll show you how you can get the extreme payoff of 4 times more money or return on your trade in the same day because of the structure of that time decay collapse and volatility collapse. So here you're seeing Amazon had been trading right here on this support level. It's a 200-day moving average, and we're looking for a target up here to this 1830 level. So we did a butterfly to do this, and it was $10 wide, which is $1,000. So bought the 1820, targeted the 1830, 1840, so $1,000 wide. Now look at the risk here. It was only 80 cents or $80. So theoretically, this could make $920. That'd be 1,150% return, risking $1 to make 11.5. Pretty nice. And if you did just the shares, you're going to have to shell out $178,000 plus to buy 100 shares. And if you did hit your target, you make $48 a share or 2.69% return. All right. So which one is better? Just looking at that. So here's the other great advantage. This was in the morning of the option expiration day on the 6th. This was about 9:30, 10 in the morning. So at this point in time on Friday, it was trading at 1836. But it was up. It went from $80 to $2.30. All right. So this was up $150 per spread or 187% return. Okay. That's in the morning, but look in the afternoon, about 3 hours later, this was up another 4 times more. It was up 400%. And that's because of the time decay. I'll show you. So here it was trading the same day into expiration later in the afternoon, and it was trading very close to the same price, but it was up. It had gone now. It was from $80. Now it was trading at $6.95. So it was up $614 per spread on your return of your capital at risk 80. So now it was up 769%. That's just in the same day. But what that is doing is taking advantage of into expiration. This time goes to zero. The timing component of the spread is going to go to zero. So you get the major impact of that plus volatility. So that little area there is what's left, still a little bit of profit in there. That's what's left in time and volatility. So that's the other great advantage. You get, the potential, if you hold these into expiration and nail it close to your kind of target, you can really increase those returns on that. Now, here's another one we're going to look at. Here's the long condor spread. So again, I like this one a lot because it gives us a positive theta, no time decay. It lowers our capital at risk, and it gives us a potential for a big return. Also fantastic for hedging. So here's a trade that we did on Boeing. And it was trading at the time 204.50. And, we took it off. It was trading up here to 215. We were targeting up in this area here. But Boeing had been just so volatile. We wanted to do a very low risk trade. So we did this with a long condor. So look at the risk here. We had a risk of $65 on this trade. This is a long condor. So we're long here, the call spread at 205, 207. And then we sold against it. And we did this as a spread. We sold the 217.5, 220. So we had this condor structure like this, and our maximum risk was $65 per spread. So one spread, $65. And this, though, was trading right here at our target, within the target zone here. And that was then went from $65 to $172. So we were up $106 per spread, or 163% return on that risk of only 65. So looking at that risk first, 65, that's definitely something that you can handle on most trades. So the potential, though, if we held this into expiration, it would have made $185 if it went out between the spreads, which would be 285% return. So you can get the idea of how powerful these can be. So here's your risk profile. You're risking $65 on the spread to make $185 potentially. So not bad. Now, here's another example of what we call opportunistic hedging, and this is doing it with a long condor. So in this example, we started out with a put debit spread looking for a downside move. And then the other great thing with options, you always look when you're trading, have a trading plan where you're looking at multiple steps ahead. All right. So we're always thinking, okay, what if it then traded down to our target? So we take profit. Is there anything else we could do to enhance this trade, make it better? So that could be reducing the risk, which could also then increase our return on that capital. So this one, I'll show you how we turn this into a free trade. So started off with a put debit spread. So we were targeting down to that 270 area. So we did a 273 put long, 270 short, put debit spread, low risk, $65 on the trade. Now the spread width is $3 or 300. So we've got a potential on this trade to make $235 if it at expiration would stay down there. But most of the time, these short trades, they don't last, right? So that would have been a really great return, but we've been tricked so many times on the short side that we tend to, go ahead and lock it in and hedge it. So this one, when it hit down to the target, what we did, you take partial profit. It was at that point in time, $98 per spread. So that's still a really good return, 150%. But instead of just waiting, thinking that, we'll wait until expiration, see if we can make the max profit, we were able to hedge this or convert it to a put condor, and we converted it to a free trade because when it flushed down to that 270, 71 area, we sold an out of the money bull put credit spread for $65 credit. All right, so here's the other part of the trade. So it flushed down to that 270 level. And at that point, we were ready to do it. We looked at the different variations. We could sell the 268.65 bull put spread, bring in $65 credit. And now we have a zero risk trade. So we cover the cost of the debit spread with the credit spread received. And now we've got this structure here with a profit zone in between. If it was to go out here, you've got $300 profit. We have zero risk now on the trade. So we can kind of kick back and see what it's going to do. So it went out, was trading right here. We closed it out, trading right there at 271.30. So this was up $164, but on zero risk. So you can see the difference. Trade one made 98, not bad, or 150% return. If you look at it that way, it looks pretty good. But trade two, that's basically an infinite return because there's zero risk. So that's the beauty of these kind of trade strategies. So if you'd like to learn more on how you can master these really high reward, low risk strategies, and these can work in any kind of market environment, two things that you can do. Hopefully you got enough ideas here where you probably figure it out yourself. But if you want some more additional help to make your learning curve a lot faster, I've got a really great course here that if you'd like, I'll give you the link here. It's a $97. Now this is a course that I just did here. This was done in February. So it's a relatively brand new course, and it's on demand. So this is what you'll get. So you'll get this, it's a 7+ hour recorded course that we did live of just the butterfly and the long condor. And so it's an option master's course on these two strategies. So you'll get the full PowerPoint. I'll show you everything you'll get, but for $97, you can't go wrong. And it's yours forever. So you'll get the full on-demand course, the butterfly long condor. We'll also do a live follow-up Q&A. We'll send you a link for that when we're ready to do it. And you'll get that. Plus that will be recorded. And then you'll get the full, this course is broken down in modules, like chapters of a book of 30 minutes or less, plus my course are very detailed with lots of examples, 456-page PowerPoint of that course. So here's what you're going to get here today. If you'd like to join us, access to the 7-hour recorded butterfly course. If you go to my website, powercycletrading.com, you'll see this course is listed on the site for $497, but you're going to get it here today at $97. Plus you're going to get my options beginners course. So anybody here that's just starting out in options, you're thinking, well, I'd like to learn that, but maybe it's too advanced. This is yours forever. So just put in your library, come back to it when you're ready if you need to, but take advantage of it now. But you're going to get my options beginners course and my option beginners program. So you'll get that to really kind of help you up the learning curve there. So these are two additional bonuses. Then we'll give you a live follow-up Q&A, live plus recorded. So you can come in there and ask questions. And then I'll give you my option trading tutorial. This is just another kind of option course on the Greeks and probabilities, things like that. And my option strategy manifesto course, this is This is basically 15 different option strategies that I'll take you through, and I'll show you here in a minute. And my Greek power tool guide, this is something you can print out, put on your desktop, shows you what the Greeks are. But the other big thing to help you and support your learning curve here is you're going to get everybody here that signs up today. You'll get a 1-month trial membership to my trading club, which gives you access to my virtual trading room open each and every day, and to our weekly Q&A. So this will give you additional learning support. You know, once you go through the course, if you have any questions, you can come in and ask in the trade room and ask whatever questions you have. So it's a really great way to give yourself additional support. So all this here for $97. Now with the trading club, if you want to start it later, you don't have to start it today. If you buy it today, you can send us an email. We'll start it, you know, a week, 2 weeks, or a month from now, you know, whatever you'd like to do on that. So we're very flexible. So use that link here. I'll give it to you one more time, but it's a really great course. Let's go through. We'll go through the bonuses here, and then any questions I'll be happy to take it. So this course is what I did live in February. So it turned out 7+ hour course, again, recorded in modules of 30 minutes or less, 456 page training manual. So basically a blueprint course on these two strategies, takes you through how to use it for income, profits, hedging, et cetera. A lot of hedging covered in this course. And like I tell my members and stuff, if you don't know how to hedge your trading, accident waiting to happen. So part one, we covered the importance of the Greeks that are important, you know, to make the butterfly condor work, such as theta decay, how that works, the impact that it has, how volatility impacts the pricing of the butterfly condor, and what we call volatility crush. So you're going to learn a lot here just in general period about options, and then how option pricing works, super important. And then in the course, I take you through using Fibonacci price target mapping and standard deviation, which sounds complicated, but simple, for helping you select your targets. So you always want to have targets, and this will teach you how to do the target, what I call mapping. And then we go through part two, we get into the core basics. Most traders just kind of, you know, it demystifies the butterfly and condor, so you can, in layman terms, understand how it works. And then in the course, I go into how, why, and when to use the various different variations of a long call or put butterfly. And these are all gone through every variation with different trade examples, so you can visually see how they'd work. The wide wing butterfly, broken wing butterfly, ratio butterfly, broken wing ratio butterfly, iron butterfly, vacation butterfly, long condors, like I always say, bubblegum shrimp. There's so many different ones to say. Yeah, this is my butterfly course. I did this just in February. So if you would have known if you took it live in February, but this was February. So this is brand new, basically. And then goes through what are the best timeframes that you should use to capitalize on the butterfly, and what, you know, stocks or ETFs to use. And then how do you get those structures where you get a setup of 10-to-1 or higher? How do you profit from, you know, what we call volatility collapse and theta decay using the butterfly and condor? And then another part of the course is how you can use the butterfly strategy to what we call option expiration or pinning. So, you know, 12 times a year, monthly, we have monthly option expiration. So it's a really good opportunity to do what we call option pinning trades, where you're looking to select where the monthly options will go out and expire at what strike price. And then what we'll typically do is we can set up a butterfly at that strike price to take advantage of the theta decay and time and volatility going to zero at expiration when it pins. So this course is a lot of fun, plus gives you a really great way to make big returns on low risk. And it's what we call pinning. So we'll go through in the course, it takes you through how to select your targets, you know, what strikes to select based on unusual option activity and Fibonacci, and then how to structure the trade. And then the course goes into the condor, long condor, on how to use that, take advantage of the long condor, either calls or puts. And these are fantastic to give you that bigger profit zone, and typically returns of 100, 200, 300% per you know, capital at risk, and positive theta, very important. So then how, why, and when to use the long condor. Now the part three of the course is a really, probably to me, the most important part of the course, because it's on the hedging. And if you don't know how to hedge, you know, you really need to understand hedging if you're looking at, you know, swing trades, things like that. So it takes you through what I call the progression of hedging. How can you hedge if you're long shares? So how do you hedge that? How do you hedge if you're long a call or a put? How do you hedge that? How do you hedge a spread? So it takes you through the different progressions for hedges that you can use in your trading. So this alone is a great part of the course. And then we jump into how to use the butterfly long condor to hedge a core position, or to use it to hedge vertical spreads, maybe a credit spread that you have that's going against your debit spread. So go through a checklist of when to put these on, take them off, execution and management, and then you get a resource chapter which takes you through, what is your risk of assignment, what is your risk of expiration risk, and auto exercise. So it takes that and shows you how this works, so you're not worried about it. And and then I give you a trading library, 58-page trading library of butterflies and condors you can look at to see how they actually work. So it's a very, very thorough course. And little feedback said from Alicia, I've never seen anyone explain options like this. It's excellent. This is exactly what I've been looking for. Very informative. No one has anything like this. Wish I'd found you sooner, but I'm glad I found you now. Thanks again for your time today, Larry. And this is from Pam. Excellent class, Larry, as usual. You under promise and over deliver. Wish I'd known how to use this hedging before I lost so much money on credit spreads. And that's so true. So many people have lost, doing credit spreads like that. And then here's from Jim. This is really true as well. So thanks again for showing so many ways of getting out of trouble, right? In trading, we can always find a way to get into trouble. But by these two strategies, putting these in your toolbox, these will really help you to come in handy to keep your trouble down or to reduce that trouble. Okay, so it's a great way to hedge. And so Jim really pointed that out well. So here's everything you'll get. I call this the survival bonus package. You're going to get my special options for beginners. It's a brand new course. We're still tweaking it here, so it's going to be even better. But this is a new on-demand option beginners course that basically takes you through what options are if you're just starting out. So it demystifies an option versus stocks. What is a put? What's a call? Mastering that. What is option expiration? And then it goes you through a kind of a beginner's option strategy, the covered call, and then what we call a covered call with a protective put strategy to it. So it's a really good option beginners course. You'll get that as a bonus. And then my other bonus is a beginner's option home study package. So this will 4-hour course on options from a beginner's point of view. So how to develop a trading plan, basics of options, how options work, types of options, monthly, weeks, weekly leaps, things like that, different trading levels for options. So another really good bonus course. And then, like I said, you'll get the follow-up Q&A, which will be recorded, and you can come in, ask questions on that, or send in an email and I'll answer it from that standpoint. And then you'll get my bonus to my option trading tutorials, another option course, basically 60-page option guide with videos covering the Greeks, delta, gamma, theta, pricing of options, standard deviation, probabilities. So again, these are all yours forever. So great trading library for your options. And then you'll get my 15 option guide. So this will take you through, if you're, hey, what's a back ratio spread? You can go through, this will tell you what the trade construction is, when to use it, what's a long straddle or short straddle. So 15 different option strategies there to help you out. And then my Greek power tool reference guide. So you can print this out, it tells you what the Greeks are, and it gives you that, if you're not, hey, what's rho or what's gamma, so you can check that out. But here's a really good, helpful support part of this offer is you're going to get one trial free month to my trading club. And so this will, provide you additional support for the course, or any questions you have on the course, or any other trading problems that you might have. You can come in and ask the questions in our trading room. So this will give you access to the virtual trading room for 30 days. And if you'd like to stay on, then it's $97 a month, or you can do annual membership for $488. But we have virtual trading room open every day during the week, 9:30 to 10:30. I'm in for the first hour, back for the close. I do a daily video newsletter update every night after the close. These are archived. Then we do a weekly Q&A every Tuesday, live and recorded. So another really good area to support set up for members. You got an educational vault for the members, a lot of good educational material. And then you get discounts of 60% off on all my courses and trading software on my website. So I've got a lot of great trading software that you can get for big discounts as well. So, just overall experience will be really helpful for all the things that I'm giving to you in this package. Here's like what Vinette said. He said, trade room experience daily is awesome. You cannot get that anywhere in real time. Nothing like it. And then here's Pam. This was a good one. With the markets being so crazy, she said, this schizophrenic market certainly keeps you on your toes, Larry. and you're a master at the managing the trades. So a lot of great stuff here. This will, really help your trading overall and pay for the course very, very fast at this low price of 97. So again, thank you so much for having me here today, Fausto, and hopefully everybody has a good rest of the week trading. So if I've got a little time here left, if you have any questions, let me know. What is the average duration of the trades? Yeah, so I like to, kind of look at trades kind of on a swing trade basis. So that could be a week to 2 weeks is kind of the average duration, or it could be you're with really certain setups. We could be in and out of the trade in one day, but typically a week, maybe 2 weeks, So, but you can make it longer, but that's kind of the duration. I like to keep them kind of short duration to take advantage of the time decay component of these two option strategies. So any other questions here? Question, do you always start with the butterfly spread or convert it later? That's the great benefit too. So sometimes we'll start it with the spread, sometimes we'll convert it later. So it just kind of varies. So if you get a good trade entry and you get momentum to one direction, I typically might like to start it out with just a debit spread, and then I could convert it later. If it moves in the direction of your spread, then you can convert it to a better spread because you get more premium. So that's a great question. When would you use calls versus puts in a butterfly? Okay, so in a butterfly, just think of it if you're an option trader, right? So how do you go long? You can go long using calls, right? If you buy a call, you can go long, or if you want to go short, you can buy puts to go short, right? So if we're doing a directional trade with a butterfly for an upside move, we'll do it with calls. If we're doing a directional trade for a downside move, we'll do it with puts. Any other questions? Yeah, here's the link again if you need it. So put that in one more time. So do you help make a trade? Yeah, in the trade room, we'll go through every day whatever trades are looking good for potential trade setup. And so, step you through that. And I do also have an alert service that I'll send out text alerts on specific trades. So I've got 4 different alert services, and you get all 4 in the alert service, but one service will give you, debit spreads. One service gives you butterflies and condors. And one service I have will give you what we call calendar and calendar diagonals, and the other services for earnings type trades. So those are text out to you or emailed, or you get both. So what account size? Well, a lot of times your account size is going to be governed by the broker you use. But if you look at this will show you the account size. Look at this. Okay. So if we back up and I'll show you a trade, you can see how you don't need a big account. So I'll just back up here a little bit here, try to find one of the trades that we went through here. So for example, let's say here, this was a call condor. Okay. So you would have needed $65 if you did one spread. Let's say you did 100, you need 650. So you can get an idea. You don't have to have a big account size. Okay. So you don't need much, but that's going to be, the broker is going to pretty much tell you that. Yeah. If you're a beginner, this is a great package for you as a beginner. Kind of designed it because I wanted to give you a very low price of entry, 97. Not only do you get this course, fantastic course, this is kind of my signature course, but it's yours forever. So, if you want, and starting out, I gave you these 2 option beginners course to get you kind of rolling. So if you're just starting out, this is the perfect package because it's only 97, but you get these 2 beginning courses. This is a fabulous course. And then you get this additional support. And then if you want to stay on with us in the trading club, it's 97 a month or 488 a year. You can come in every day during the day and ask any questions on any of this stuff. So you get this extra, mentoring or tutoring. So this is a really great, and it's like I said, it's yours forever. So it's really good as a way to get you started. You never know until you take a shot, right? What did Wayne Gretzky say, or Jordan? If you never take a shot, you'll never score a goal. So if you want to try to take a shot, it may not be your thing, but you may find out that the light bulb snaps on and this is exactly what you've been looking for, and it only costs you $97. So it's a really great way for you to start. So again, thank you very much. I think my time is up, but again, good luck everybody trading, and thanks again, Fausto, for having me here today.
Thank you very much for being here, Larry. And that was very, very informative. Like I always tell everybody, listen, if you really want to learn about options, that's why I've been doing business with Larry for so long and having him a regular guest here for so many years. It's been, I mean, like I said, it's been, we're in 2001. Yeah, it's over 6 years now we had him. And you know what? Just getting better. So take advantage of that $97 like anything else. What do you have to lose? A lot of great content, great way to start. But I don't want to run behind. I got Melissa in here right now and just want to give her a quick intro so she can get started. So I know Melissa Armo for a long, long time also. She's very well known. She's been on TV many of times. She's been on Cheddar, she's been on CBS, she's been on Fox Business News, Fox News, you know, all these great financial stations, and talking about a little bit more about what she actually preaching, which she's very known for, being from a mortgage broker for so many years, working with some of the biggest banks before she started realizing, a little bit like myself, and got into, you know, taking a career and pursuing trading back in 2008. So she's a self-taught day trader, trades very similar like myself actually, but she's more of a fan of shorting, which is obviously we're always nervous about what's happening. So she's going to talk about the volatility, all the things that happen in the market, and tell you a little bit about the way she does a little bit more of her short terms. And I know she does a little bit more of the swing trading type of thing of overnights, and she'll talk a little bit about that. But Melissa, thanks for coming here. And like I said, stage is all yours.
Thank you, Fausto. Welcome. How's everyone doing today? Fausto and I have another thing in common. We both live in New York, except for I'm in the city. It's an interesting place to be right now, but beautiful day here in Manhattan.
And I know we're supposed to meet up one time. I think what would happen with us, not to cut you off, Melissa, but with all COVID, I know we were planning on, like, you know, trying to catch up on a couple of things, but we definitely, that rain check is going to be due very shortly.
Yeah, I don't know. New York is not the place you want to visit right now. I'll let you know when it's good to go. It's pretty much a ghost town still, but hope is on the horizon if they can get the vaccinations going for a period of time here into the summer. But today I'm here to talk about trading. And again, because of COVID, because I live in New York, it's been really, really nice to be able to work from home. So I'll just start out by saying that if you decide that you want to trade and you decide that you want to do this for a living, you know, it's such a great thing to do, because you don't have to worry about going out. You don't have to worry about the commute, the traffic, anything else. Now, I know that some people, depending on what you do for a living, are part-time working from home now. I have a friend that's working 3 days a week in the office and then 2 days a week from home. So even if you could spend 2 days a week trading, you know, if you're at home and can do it 2 days a week, that's really enough for you to be able to make some extra money. People are looking for ways to make extra money right now. Again, part of it is COVID, and part of it is just what's going on all over the world right now. Interest rates and the market, which I see is backing up. We're rallying here into the close today. But we're going to talk about shorting. We're going to talk about shorting, a couple of nice shorts here today. And we're going to talk about shorting for fast profits. This was a short of the week. And I just plop this in here to bring it up. I do day trades, but I also do options. So Wednesday, I called puts. I called the 527.50 puts in Netflix. And this morning I called the 510 puts. This was the short of the week. So you could have got out of it yesterday. You could have held it into today. You could have done the one today. Just to give you an example, if you bought the Netflix puts yesterday, the 527.50s that I called around noonish, it was a little bit before 12 o'clock Eastern time, and got the drop today, it was almost a 500% return on investment. Now that to me is fast, okay, for an options trade. And as far as day trades, I usually look to get in and out quick. We shorted the SPY today. That was the day trade. Today we shorted the overall market. So yes, I do prefer to short. Why do I prefer to short? Because short moves happen fast. Panic comes into a stock quickly. For example, I'll just bring up here and show you the Netflix. What I do is focus on gaps. That's how I'm making the picks. That's how I call the Netflix. So what happened here in Netflix? I'm going to go back here to the beginning of the week. This was Monday. Netflix rally, okay, closed here, gapped up on Tuesday, rallied, okay, ran through 540, couldn't get any higher, didn't get up to 550, dropped, closed. Then the next day, this was the day I called the 527.50s, Netflix gapped down. So yesterday, what's today? Thursday. This was Wednesday. Fell, dropped, closed then last night, gapped down here today for Thursday, fell. And then once it started getting the selling and the shorting momentum into it, it dropped like a brick. So this is helping to pull the Qs down a bit too. And the market gap down this morning as well in the SPY and the Qs. But overall, the reason that I like shorting, although I'll go long, I'll preface this by saying I'll go long as well, but I always go to the short side first. So I look for shorts first. If I don't find any good shorts, then I look for longs. Okay, so I'm really like shorts because I like getting in and out of trades quickly. When you're booking money, the faster you can book it, the better you can book it. Why? Because you never know what's going to happen. So you're protecting yourself when you get these fast trades and you get out and you book the money, because you don't know what's going to happen with economic data, what's going to happen with COVID, what's going to happen with any news in any sector and anything you happen to be in. They're testifying on Capitol Hill today. In fact, I didn't have it on, and then Biden was doing a press conference. There's so many things that are going on during any given day right now. And we're also interconnected also across the world. So something could happen in a completely different country and then affect the US markets while we're open, or could create a gap up or a gap down overnight. So I focus on gap downs. I also will do gap ups, like I said, but I go to the gap downs first. Now let's just talk about what a gap up is. This is a gap up. This was back here January. Netflix gapped up, closed here, gapped up. Okay, it closed here around 500 and change, gapped up here around 560, rally. So this you would have gone long, or you could have done calls. Let me just see how I can get the chat. Am I calling the gap up? I don't know what you're talking about. Somebody said, Lewis is saying, there's no gap up right now. Netflix, what are you talking about? You lost me there. Netflix gap down. See this? Closed here, gap down, fell. Closed here, gap down, fell. Now, can you short every gap down? No. Can you go long every gap up? No. So I devised a system that took me about 3 years to figure it out on my own. This is, 2008 when I started figuring it out. Took me about 3 years to figure the whole thing out, where I will find the good ones to do, like the Netflix, okay? I'm not shorting every gap down, and I'm not going long every gap up, but I find the good ones, okay? So I have a rating system I divide where I will find the good ones based on a 26-point rating system. If it rates more than 20 points and the stock gaps down, I'll short it or do a put. If it gaps up and it rates more than 20 points in the 26-point system, I'll go long it or do a call, okay? But these were good gaps here in Netflix to the downside. I don't know what ones you're talking about gapping up. I'm not sure of anything that gapped up today, quite frankly. On many given days, most things go with the market. And because the overall market gapped down today, a lot of things gapped down. Now, some things gapped down and reversed, okay? And some things fell quickly in the morning. But anyways, now's a good time to think about if you want to trade the market for a living. Why? If you have the convenience to work from home, or even if it's part-time, you may have some time to be able to devote to trading. And again, it's Monday through Friday. So you're not trading on the weekend, and you're focused mostly in the morning period, okay? Occasionally I will call a later trade, but most of the times we're focused on trading in the morning, getting in and out in the morning, okay? So a lot of people try to do this trading thing. They try, and they never, ever get there. They just never seem to get there. They flounder. That's the best way I can describe a lot of people that I've encountered. In the years that I started my company, my business called the Stock Swoosh, and I've been teaching people my method, I've run into so many people that just are back and forth. They make money, lose money, make money, lose money. Overall, they're wasting years of their life, tons of time, and mostly losing. They're floundering. Once you get to the point that you're committed to doing this, you need to step forward and say, I really want to do it. I'm going to do what it takes to get there. And part of that is a cost of time and expense for you to do it, okay? For me, my personality is I'm just all in something when I do it. Now that's just my personality. I have a type A personality, but I think the only way you can really make it in the market overall and ever become successful at doing this is to throw yourself into it. Okay, because the fact is there's a lot of people that want to make money in the market. There's a lot of people that would love to quickly be in and out of trades and make thousands of dollars within 24 hours or within 24 minutes. Not all of them will. In fact, most people lose that trade, specifically options. You know, you got to get the direction and the timing right in an option. You know, we got it in the Netflix, but that's one thing about options and overall, even the day trades. When I'm in a day trade, I have to get in and I have to get out between 9:30 and 4. I have to get in and out within a 6.5 hour time period, or I'm not going to make any money. So you've got to get the direction right and you have to get the timing right. So there's a lot of things that are involved with trading. Many people, I think, want to look at stuff as black and white. They want to look at an indicator and have that one indicator say, boop, that's going to do it. That's all I have to do. Or they buy a system where it's a computer generated thing and it just tells them exactly what to do. No, I hate to tell you, but you're going to have to use your brain. You're going to have to use your mind. There's analysis. There's a skill set involved. I have a skill. Calling the Netflix, that was a skill to see that that would collapse like that within a 24-hour period. You learn the skill and you can make money. Okay. But I find that a lot of people, like I said, flounder and are not interested in really putting the effort towards doing this and learning the skill. They want to get rich quick thing right away. Trading is not gambling. It is not like that. It's not like going to Atlantic City and putting on a bet without knowing anything at all about anything. Okay. So you can do this if you're willing to learn what to do, learn a good strategy. Okay. And then you take that and you continue to trade, and you, as the time goes on, as the years goes on, then your skill set gets better. And as your skill set gets better, then you risk more money over time. And that's how you really start to get somewhere with it. Okay. You can risk 100, take 100 shares on a trade. You could take 1,000 shares on a trade. You could, I had someone that emailed me, she had one contract of that Netflix. She made $1,000 today on the 510. So, you know, you don't have to have some huge account to be able to make money, but you absolutely have to know what you're doing, okay? And any questions, I can see the chat now, I pulled it up. Just plop it in the room. No matter what your goals are to trade, you need a solid strategy in order to achieve them. Okay, so I'm very, very focused every morning on finding the gap. My strategy is gaps. And again, as I started out, one nice thing about day trading is you can work from home. It's been a blessing for me in the last 12 months with COVID. But I really, quite frankly, have always enjoyed working from home. I did mortgages before I started trading, and I worked from home doing that. Now, when I did mortgages, I was working 7 days a week. Nice thing about trading is I'm not working 7 days a week. The market is closed on the weekends. I get my nights off, I get my weekends off, and I love that. It allows me to have more of a life. And it's really part-time hours for full-time income. But again, you have to learn what to do. So for me, the investment of the time and money to get to this point in my career, in my life, definitely was worth it. But I think a lot of people start to trade, lose money, because no one starts and wakes up tomorrow and then starts trading and makes money right away. That just isn't realistic. People lose sight of the long-term goal. If you have a long-term goal in mind and you're realistic about achieving it, you can achieve it, okay? Because again, you have to think of it and have it that what is the bigger picture here, what you want to do. And again, it doesn't matter if you want to do it full-time or part-time. It's the idea that you still have to be 100% focused when you're in a trade and in the moments that you are trading. And again, it's nice to have weekends off. But there's an unlimited income potential for you if you want to trade based on what? Size you're taking the position and the skill set that you're using. So how good are you at really pinpointing where something is going to go to be able to take the trade? But nothing in life that is great comes without taking chances or risk. When you put on a trade, you're taking risk. Not every trade that I take works. Sometimes I take a trade and it loses, okay? That's the chance you take, okay? When I look at something and I use my system and I rate it, I say, I'm looking at odds, okay? I said, these are high odds. That's why I developed the 26-point rating system. I say, listen, 20 points or more, if I rate something, tells me high odds, it's going to work. Okay. I don't want to do low odds trades. I want to do high odds trades. Okay. So that's how you have to look at it. And every time I take a position, I'm weighing that I'm weighing that. It's called, calculated risk. It's not risk for the sake of taking risk. Like all the people that are trading GME, I predicted that that stock would drop in the earnings. It did. I didn't trade it because that stock now is off limits. That stock is tainted to me. I will never, ever trade it forever, ever again. It's tainted because of the Reddits, but that was very predictable that that would gap down in the earnings and fall like a brick. So the fact is, like, you have to look at something and say, is this worth the risk? Or is this not worth the risk? And then you make the assessment. And I also use stops when I trade too, okay? So you need to be taking more winners than losers when you trade. That's the only way you're gonna get anywhere with it. You have to have more winners than losers. So keep the odds up high. All right, everybody with me? Anyways, think about where you wanna be end of 2021. Hard to believe we're almost in April. Next week is April, it's crazy. Easter in a week. And you still have 9 more months left in the year. But I mean, we are 3 months into the year, which is crazy to me. It seems like just yesterday it was the holidays, but here we are. You have to start setting goals for yourself if you have not. If you're losing money in the first 3 months of 2021, you better step back, get organized, get a game plan together, figure out what you're doing wrong. Is it you're risking too much money? Are you not exiting your trades when you're up? Do you not have a strategy you're following? Do you not have a strategy at all? Okay, what is it that you're doing wrong so that you can get somewhere with this within the next 9 months? And again, like I said earlier, a lot of people just flounder. While it's great to talk for an hour here, and you've been listening to many speakers today, the reality is that you're not gonna learn how to trade and make money unless you sign up for a class and learn from an expert or pay someone for private tutoring to learn from them. You will not learn in any free webinars or free YouTube videos how to trade. You won't, and I didn't. I created my own system over 3 years of painstakingly trading the market with my own cash while I worked full time doing mortgages, back and forth. So you got 2 choices if you want to make it in the market. One, create your own system, which was the path that I did. That path is emotionally draining and financially draining. So you better have a lot of money saved if you're going to go down that path. And it still will take you years to create your own system. Or 2, you pay someone to learn how to do their system, okay? Now, you may have taken classes and you may have not learned anything from those classes, but no one said you're going to take a class right out of the gate and learn everything. You may have to take a few classes until you find the good ones. Like dating, you have to kiss a few frogs to meet your Prince Charming. That's just the way it is in life. And I always say to people that come to me, I said, people are meant to find me. Okay, the people that find me and come to me and I teach are meant to find me in this world, because there's a ton of people out there in this universe that teach educational information about trading or stocks. So you have to find someone that has a strategy that resonates with you, and you take risk and you learn it and you see what happens. Or like I said, you teach yourself. When I started out, it wasn't like I planned to teach myself. I did take one class. I did not learn how to make money in that class, but I did learn a basic full understanding of technical analysis. So what I do is chart reading. It's not based on fundamentals. What I do, I look at the technicals, but I'm looking at the technicals in a gap. So let's go over here again. What is a gap? This was a nice one we did the other week. This was Nike. It was Friday. We shorted this one. Stock closed here, gap down. Open, rallied, dropped. So what is a gap? We shorted this as a day trade. I did not do an option in this. If I had known it was going to drop like this, I would have. But anyways, we did a day trade in it. So a gap is the difference between the close and the open. Nike, this was Thursday night. This was earnings. Closed up here around 143. Open in the morning down here around 140. Rallied, broke. So we shorted it. We did a day trade. You need a margin account to day trade, okay? Or like I said, you could have done it, put in it. I did not, but it was a nice straight day trade here, okay? I don't know where this is at today. I haven't looked at this actually at all this week since Monday, but this was a short. Fell, okay? So that is what a gap is. And I have mastered the skill of gaps, and that's how I make money. And that's what you come and learn from me, okay? Now, again, I will do bullish gaps, but I do prefer the shorts like the Nikes. I find that shorts move quick. They move very, very fast, okay? And again, the nice thing about that is you can be done early in the day, and then you don't have to worry about all the other stuff that's happening in the world that could affect your trade. Sometimes things happen that's economic data in the afternoon when you have Fed minutes and meetings that can help your trades, but sometimes it makes things all over the place. we've seen a lot of volatility lately. You're seeing that right now. We sold off yesterday, gap down today, dropped, pushed back. That's volatility. Volatility is something going in a direction that you don't expect. Volatility is not necessarily selling. Volatility is something happening that's unexpected. And don't think that's not going to happen tomorrow either. We're rallying here today and we held on the 50 per moving average. And I have a feeling, and I'm talking about the SPY, that a lot of people think that we're going to just continue here and go back up to the highs. Don't bet on it. Don't bet on it at all. If we have time at the end here, I'll look at the market and tell you where I think we are into the close. But I mean, we are in a volatile market. I don't think it's going away. And we're still in this period of COVID. I just got done talking about New York City. It's ridiculous here how many things are closed. We've, on a scale of 1 to 10, we're at a 2. I mean, it's just like crazy. So, I mean, don't think that the market is going to keep going steamrolling ahead. I get up in the morning and I do something different every day. I never know what I'm going to do till I get up, but I never know till I see the gap. I don't know what I'm going to do tomorrow. I may do 3 things tomorrow. I may do 1 thing. I may do nothing. Okay. I don't take a trade, you know, until I see the gap. Okay. I'm not predicting the gap. I'm predicting where the stock's going to go after the gap or the overall market. Okay. So I developed this system. It's called the Golden Gap Rating System. It looks at 26 points in the daily chart of a stock. The rating system is a checklist. The checklist tells you what to look for in the price of the stock. I do it in the morning, in the pre-market. I get all ready to go, see what I like. Or I might have a list and I rate something, but I don't do it till a little bit later because I want to make sure that it sets up first, like the Netflix. We did that a little bit later this morning. The points predict price direction correctly when a stock is gapping. Okay. And again, it's based on momentum. What do I mean? Selling pressure or buying? I'm looking for the money, the institutional money that is buying into something and moving it up, or selling, dumping it, like Netflix. The stock is getting sold off. It's getting dumped. Okay. And you just train with that momentum, train with that flow of the money, trade with the institutional money, and it's very easy to make money. It's very, very easy if you're in the right direction to make money. If you're not in the right direction, you will lose. Again, this is very simple. It's very basic, but a lot of people don't understand it. They think that to make money, you have to do something tricky, or very complex. It's not. The complexity in what I do is the analysis that I do in the pre-market, doing the ratings, looking for the points, trying to figure out what's going to happen when I'm going through step by step by step. But that is all done for me early in the morning when I get up. Okay, not in split-second decisions. I already know what I'm like or what I'm doing before the open or what I'm watching. Okay. Anyways, golden gaps have 80% of them move in the first 30 minutes of the day, which is again why I like to get in and out quick. And I call this the money move. That's what we did today in the SPY. We shorted it. You play it, you get in, you get out, you book the money, you're done. Now, if something's continuing to go like Netflix, you can hold it. You can hold it if you want to. But again, you know, you're never going to lose money if you get out when you're up. Now, let's talk about a couple ones we did here. This was Apple. This was back last week. We shorted Apple. Apple's been falling. This was a day trade. Now I have advanced trader risk. We will look at some beginner trader risks here. This, you would need margin to do it. You can trade at a retail trading account. You can trade at a prop trading account. What's the difference? A prop trading account will give you 10-to-1 margin or sometimes more. A retail trading account, you're going to get 4-to-1 margin, 2-to-1 for overnights. But this was a day trade. Here's the Apple. Stock closed here, gap down, boom, fell. I think this was the 18th. Yeah, it was the 18th here. So we shorted it, 122.90, got the drop, boom. Beautiful, beautiful, beautiful move on the day here in this Apple. Exit was 120.80. This is a really nice move. Okay, it's a $2 move in a stock that happens in one day. Again, here we go, momentum. So I took a lot of risk in this. Why? We had a really tight stop in this. We got it early. We shorted it early. I took 7,000 shares of it. Boom. Profit was 14,700. Now, again, I don't think this is expensive, but if you say, well, this is a little pricey, you could buy a put in this. Okay. You could buy, well, I did call puts in this, but I don't know if I have them in here. You could have bought a put in this, or you could have done what? You could have done 500 shares. Guess what? You would have made over $1,000. That's a great trade. That's a great trade. So whatever you can afford to take as far as quantity share size, depending on your margin, depending on your buying power, depending on your risk is what you need to take. But we had a really good entry in this. Okay, it was a beautiful stop and it fell and it was a gap down. Again, here, closed the night before, fell, dropped. Now, I want to point something else out here. Let me just find one here. You can't short every gap down. Let's see if I can find one here. Here's one. This closed here, this gap down, it rallied. So you can't short every gap down. That's why I'm figuring it all out in the pre-market and the open. And just like you can't go long every gap up, can't go along every gap up. Here's one, wouldn't work as a long. This closed here, gapped up, fell. You would have lost if you went long that one there. That was back at the beginning of March. So you have to really know what you're doing. Again, the skill, the analysis, everything I'm doing is in the pre-market. Oh, here it is. Here's the 1 minute. So again, here's the gap. Stock closed here, gap down, boom, rallying, got the drop. Here's the sell-off, boom, fell. I mean, never went anywhere near where we were entered this trade. You could have been in it for a while. Now, if you wanted to get out in the morning, you could have got out quick. Got to get out here, could have got out here. And if you wanted to hold it, could have got the drop, could have put the stop at break even, let it roll on down. That was last week, a week ago. Here was another one. This was a long, and I stuck this in here because I just want you to see sometimes I will go long. This was 316. And the interesting thing is here, I actually went long, made money on the day. The day the stock closed red was the market. We closed here, gapped up, rallied, went long to SPY, and then got out. It was just 60 cents, but it was money, and it was in a gap up, and it was a bullish gap. So I want to show you here that I did go long and will sometimes go long. This was the SPY. Here it is. This is 1 minute. Stock closed here, gapped up. And again, here's the rally. This is a 1 minute chart. I'm figuring out the gap though on the daily, and then I enter the trade in the 1 minute. And again, I have a live trading room where I'm calling these trades, where I'm saying, you know, 90 by 60 or wherever, I'm calling out the entries and I'm saying where to get in, where to get out. And if you want to try out of the room, when it comes tomorrow, you can email me. I don't know what we're doing tomorrow, though. There's no earnings out tonight of interest to me, and there's zero earnings out tomorrow morning, but we could have something market related. We might have a follow-through continuation gap in Netflix. I don't know. We did break 500 today. I have to see where we close in a half an hour in that thing. If I understand you right, you trade the gap down the same day. It doesn't. Yes, if it rates well. That's what I'm pointing out, though. You cannot short every gap down. Is that clear, Luis? And you cannot go long every gap up. Is that clear? So, you know, it's what I'm doing when they rate well, but they don't all work. Otherwise, it would be very easy. Every gap down you'd short, and every gap up you go long. There'd be no analysis, but that's not the case. And today is a good example. Actually, if you want to pull up the banks, again, if I have time at the end, we'll pull up the banks. The banks gapped down. JPM, Goldman, I just was on Ameritrade talking about it an hour ago. You know, if you shorted them, you lost. They rallied. They rallied quite significantly today, actually. So 315, we did, this was not earnings. I don't even remember why this gapped down, but it did. I liked it. This was a little pricey too, but you could have done a put. I did not do puts in this, but you could have. Entry was 191.70, boom, got the drop. Again, momentum, take it, get in, get out, get in, get out. Drop was down 188.45, 1,000 shares. You could have made 31.50. This was a nice one here. Here's the day. Again, this was, I think it was last Monday. Stock closed here, gap down, boom, fell, shorted it. This is a day trade. Here's 1 minute. Stock closed here, gap down, boom, got it, got the drop, fell, That's the lily. This is a 1 minute. I have it squished so you can see the whole day there. But again, you could have got out quick. You could have held it. You could have done whatever you wanted to do. I like to get out of things quick though and early, but this did continue as well. How long before the market opened do I have to complete the analysis? I get out of bed. The first thing I do in the morning is look at the market before I go to the gym. Usually get out of bed around 6 a.m. Then I figure out where the market's gapping. Then I go to the gym. Then I come back. Then I make breakfast. Then I sit down at my desk and I start rating gaps at 8 o'clock in the morning, and I open up the trading room and I don't start talking until right before the open. So I give myself a good hour, hour and a half to rate gaps, but I'm looking at things as soon as I get up to see what's going on. I do it every day. It's my routine. I'm a very routine oriented person, and I'm a morning person too, which works out good because I trade the morning. That's the time when I got to be spot on. I always say you can be perfect for 1 hour a day. You can be perfect for half an hour in a day. The longer the day goes on, the more tired you get. I'm a little bit tired right now. I've been up since 5:30 this morning. I did a Ameritrade. I ran the room. I traded. I'm doing this webinar. I got to finish my tax return today. It's 3:30. By 5 o'clock, my brain is going to be shut off. So I full on and max myself out in the morning with my brain activity. Take all my vitamins, eat breakfast, do my thing. But that's what counts. I'd rather make thousands of dollars in the morning and just check out my brain than later in the day. I mean, that's just what I do. And Friday, tomorrow, I'll be taking it easy. I don't usually trade into the afternoon on Fridays, no matter what period of the year it is. And right now, remember, next week's the holidays. Some people, the market's closed Friday. Some people will be taking off starting this week and will take off the whole week. So it's going to be a light trading week next week for sure. But anyways, I would give myself an hour. An hour is good, okay? No, I don't get in any trades until after the open, if that's what you mean. I'm not trading the pre-market, Marcel is asking, but I'm doing the analysis. Got it? So big profits come and money moves. Netflix is a good example. Netflix is a great example, actually. So success and large profits come from quality, not quantity in the plays. Although if I read the market direction and I get the market direction correctly, we did a bunch of puts this week and then we got the gap down this morning. We were in puts yesterday, got the gap down this morning, boom. I will do a series of trades in one plop, like in options overnights if I get the market direction together. So I might do a couple. But anyways, for the day trades, I'm usually doing one a day and done. I only do the SPY today as a day trade. But anyways, it's the idea of getting out quickly. As soon as it happens, it's the idea of quality, not quantity. I will do multiple options trades if I have a move with the market that I think I'm going to get the market gapping in a certain direction or power trending. I will do that, but I don't do options trades every day. I, will try to do a day trade every day. But I might do no options trades Monday, Tuesday, Wednesday, and then do 7 on a Thursday. So you don't know. It depends what you get. But I'm looking for quality. I'm not looking for quantity. It's about just making money and getting the high rating system. It's a checklist. The checklist is the points, and that's the meat and potatoes of what you learn in the class from me. And then you may have questions after the class, and then you ask me the questions, or we go over stuff in the room. And then that's how you learn and you trade as time goes on. So my system is a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. I do have a bullish class. I do it usually once a year. That class is in April. But the bearish class is the most popular because I'm mostly shorting. And again, a put, for those of you that don't know, a put, when you buy a put, that's basically shorting the stock, okay, for the options. But I'm looking to find stocks to trade that have what? A high probability of directional bias for the entire day. 2, big moves in the day. 3, early confirmation of my buys in the move between 9:30 and 10 a.m. Eastern time. That's when I want to get in. That's when I want to see the momentum take place, which we saw this morning in Netflix and the SPY. And then precise entries with follow through and a good risk to reward. Also, I called Amazon today too, that we called puts in that too. We'll look at that tonight if we have time here before we're done. Here was Facebook. Now this feels like a long time ago, but it was actually only 2 weeks ago here, the Facebook. Here, let me find this. I called March 4th, I called calls. Now this is a long, for these who don't know, call it an option is a long. Thursday the 4th, I called the 270s. You'll get it here. So here we are. So this was a gap up, okay? Now, one of the reasons, again, I like to short is why? Short moves happen quickly, longs take long. This trade took a long time. In fact, some people killed it and they missed out. This closed here, stock closed here, gapped up, rallied, then it gapped down, then it dropped, then it rallied, then it gapped up, then it sold off like a banshee. Trade was down, okay? Then it gapped up, then it rallied, then it gapped up, then it fell, then it broke out. And here was the breakout day. It expired on the 12th. This day was the 11th. It was a beautiful trade. I called the 270s and the 275s. But if you killed it, you didn't make any money in this. If you held it through, which I did, you made money. Now, again, this is a beautiful long, but this just goes to what I'm saying where, longs take longer. And that's why I prefer to short. Shorting is fast. This was very reasonable. This cost $3, could have sold it at 8, risk 7,500, profit 12,500. You could have taken one contract, paid $300. But the return on investment was 167% on that trade. It was a beautiful, beautiful, beautiful trade. If you did a beginner risk, 2 contracts for $600 risk, sold at 8, could have made $1,000. Okay, again, I called it on the 4th. You would have had to hold it into the next week, which is still not a big deal. I usually do the weeklies, or I do every 2 weeks for the options, but here's the breakout day. Then I got off this, but I knew it was getting bought, and I missed this move up to 300. Actually, I should have done something else on this week, but I just didn't. I got off this, and it went right up. This went to 300. This had buying that came in. Again, I read the institutional buying. I read the graphs correctly, but I wish that I had done something right in here up to 300 because it went there. But I would have had to do it out longer. Because this happened, yeah, this was this week when it hit up through 300. This was a big bar too. Anyways, I also did the 275s, which I called the same day. These were cheap. Cost was $2, sold at 4, 40 contracts, and this is an advanced risk. 8,000, could have made 8,000, 100% return on investment. It's a nice trade. And again, you would have had to wait to the breakout day, which was on the 11th. If you took, again, 4 contracts, risk $800, profits 800. Okay. So anyways, that was a nice move, but it was institutional money that came in and it bought the Facebook. It bought it. So you want to be long or you want to be in calls, which is basically a long. Netflix again was a short, or so you would be in puts or you would short it as a day trade. So why trade gaps? Why do they work so well and pay so well? Because of the momentum and because gaps are created with large institutional money. But I must preface this by saying, again, not every gap. That's why I developed the system and the method to pinpoint the good ones. That's why I get up early, like I said, and take an hour to prepare in the morning to find the good ones. I want to find the gaps that are created by institutional money, not the ones that retail traders are trading, like the Reddits and the GME and other things. Okay, I'm looking for what institutional money is doing, hedge fund money, big money, banks. Okay, they're creating the gap. I need to see follow through in that in order for me to do that, which is why I wait for the setup after the open. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and confirm that the large money will flow with it. A lot of people do gap fills that are retail traders that trade gaps. That does not work. Why sometimes you may make money doing a gap fill, it does not work overall. It does not work overall as a method to trade, okay? But by having a formula to rate and qualify the gap, you get confirmation and conviction that the large institutional money is on your side and you play it. Gaps are an event and create a sense of urgency. Hurry, 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 quick. It's panic. That's the idea of shorting. It's panic. Selling is panic. You're not panicking to buy Netflix today. There's no panic. You're not panicking to buy anything actually today, quite frankly. But you might have panicked in Netflix, for example. If you were long, you might have panicked if you were long, panicked because you are down and then need to sell. Okay, thus an action is being forced by participants of the stock. And this is why gap trade is incredibly powerful. So panic comes into shorts. You do not have panic buying rarely. Panic buying is something I've seen happen maybe once in a blue moon. I've seen it in the Beyond Meat. Gosh, I think that was 2 years ago now, or 2019, I want to say. 2018, I don't remember. When that Beyond Meat, that BYND had some panic buying in it. I don't remember when that was. I think it was 2019. Something really, really rare. And sometimes I've seen that also in Tesla too. But that is so rare. You almost never see it, okay? Trading gaps is a powerful and profitable way to trade because you're trading on the side of power. And that's how you can make money because, again, you're not going to move a stock. You personally will not move the stock. You have to have big money moving the stock. And all you have to do is play on that just to get a small piece of it. Even one contract will pay you, okay? And everybody's always like, well, I can't trade until I have this much money and this much money and this much money and I have to have a lot of money. No, if you have a small account, you can make money trading. If you have a big account, you can lose money trading if you don't know what to do. So you have to know what to do no matter if you have a small account or a big account. But the benefit and the goal long-term is know what to do and have a lot of money. Guess what? That's when you've made it, okay? But take step by step by step by step and take the amount of money that you have and build on it. Take a $2,000 option account or a $2,500 day trading account and turn it into 10 grand. Then you can risk more. Be reasonable about it, okay? Everybody's working within frameworks and guidelines, and even hedge funds. You saw that with what happened with the GME. Even hedge funds have parameters that they must work within those parameters or they're in trouble too. No one has unlimited funds, okay? Even places that are getting leverage from brokers or even loans from banks are going to get cut off at a certain point. All right. You must be thoughtful about the risk you take, but you certainly can be reasonable and still make money. So anyways, the whole philosophy behind what I do with my gap rating is to analyze a large time frame, which is the daily, to make the trend decision on the directional bias for the gap and then to play it. All large traders of every kind look at large time frames to make decisions, particularly institutional traders. So again, I'm looking at the daily. And then I make entry decisions and exit decisions on the 1 minute chart on the small time frame. That allows me for focus and high degree of accuracy. And then I'm using the daily chart to make the decision for the stock pick for the accuracy and the direction, particularly then when I'm doing an option. And then the 1 minute allows me to have the good risk to reward. Okay. So the whole idea of doing this is to make money. While trading is fun, it's not fun if you're losing. So like I said earlier, half an hour ago, take a step back if you're losing for the year. You're not doing something right if you're down money for the year. We're 3 months into the year. It's not January 15th. Okay. If you are losing, take a step back. You cannot continue to bleed money in the market if you don't know what you're doing. And you're better to face it and say, wait a minute, is this something that I really want to do? If it is, then commit yourself to doing it. I mean, that's just the only way to go forward. You can't continue to bleed money if you're failing. Any questions? I truly believe that people can be successful. Why? I'm successful, and I've also taught people to be successful. Everybody has a different learning curve. I meet people. I'm here to help them, teach them, answer their questions, but everyone is in a different time frame. Some people I've taught have no knowledge about the market before they come to me. And some people have been trading the market for years, but nobody knows what I know. So they come to me, and they have to come to me with an open mind to sometimes relearn things that they know that are wrong and really have conviction. I talk about that a lot. I said that about the market even yesterday. It's based on having, though, what I do, a solid foundation. And then the extra skill set that I have just adds to it. And that's the benefit of trading with me and being in my room. But I really think people need a plan of action where you want to be for your financial goals for 2021. Like I said, this year is going super duper fast. I mean, I feel like, gosh, I seriously cannot believe that it's April, let alone the fact that we're 1 year into COVID and we're still wearing these stupid masks and New York City is still shut down. I mean, it's really quite shocking, to be honest with you. It'll be interesting to see really what the market does and what some of these big tech stocks do come April second quarter. But there's going to be a lot of opportunity, I think, in April to trade. So the second week of April is when the banks report the financials, and they will move, and they will move the market. Whether they move up or whether they move down, I have no idea. I don't take positions in stuff predicting the gap. Like I said, I wait for the stock to gap. But typically we do stocks that gap on earnings or news or with the market. Okay. Anyways, you have to be precise. I'm looking for quality. I'm looking for a good risk to reward. I'm looking for the right entry. I'm looking for a proper exit. You have to take correct size. Most of your trades or all of your trades should be of equal size. You can't, if you take 5 trades, and 3, you risk different amounts than the 2 that you did. The 2 that you risk less win, and the 3 that other ones you risk more, they lose, you're going to be upside down, so you have to have similar risk in all your trades. Makes sense for the consistency. Really detail matters though. I mean, looking at the 1 minute, I mean, just seeing what's happening. A lot of people don't even look at the 1 minute. And a lot of traders don't even trade till 10 a.m. Okay, I'm looking very early in the morning to see what's happening in the pre-market. I'm looking at night. And again, I'm looking right into the open. I've trained myself to do that. I've trained my eye. It's a window into my eye. When you come in the trading room or you get my picks on the options newsletter, you get the picks that those newsletters are sent via an email. If you're in the live trading room, I'm calling the day trades live. But you're just never going to make it if you don't commit yourself to doing it. And there's a cost to doing it. There is. Okay. I mean, the end goal is to be able to do this from home and make a lot of money. You think that's going to just, plop into your lap? It doesn't work that way. It just does not work that way. It's like anything in life. Okay. So how much money do you need to do this? You need buying power where you have to open up a margin account. You can trade it a retail account or a prop account. Take my class, it's called the Golden Gap course. The class is this weekend. I know it's the end of the week, but I am doing a class this weekend. It's March 27th to 28th. You need a trading account, you can go anywhere. As long as you can day trade, and just make sure you can do shorts or buy puts. You can open up an options account. You can have a cash account or margin account with options. You don't have to have any special software or scanners to do my system. You can trade wherever you want. In most places, you can make your charts look like my charts. Okay, so you can really go to any broker you want to, any broker that works for you. And most brokers now aren't even charging commissions. So it's cheaper than ever to trade, quite frankly, in this environment. And again, with the volatility we're seeing, that makes for lots of opportunity for you as an individual to make money, but you must get the focus right. As easily as you can make money, you can lose if you're on the wrong thing. Like you would have lost money if you had gone long Netflix yesterday or today. Okay, you have to be in the right direction. And, you know, again, Jackie, one of the traders that emailed me, and she's thrilled. She had one contract of Netflix and she made $1,000. You can make a lot of money with a small size. Some trades are small, some trades are medium, some trades are big. You don't know. You don't know till you get in the trade and you watch it, you see where it goes. But it's all about the technical analysis. I'm reading the chart. It's chart reading. The fundamentals, I don't have time to deal with them or read them. Okay, I really don't. I follow the news because sometimes I have to talk on TV or whatever, and I know what's going on in the world, but I don't make my trading decisions based on that. Now, sometimes that might help you. It might help your conviction if you see the fundamentals of something, but the choices I make are based on the price action, okay? The price action of the gap. But you need to have a plan for booking money. Again, in, out, in, out. You have to get in and you have to get out. The faster, the better. Good risk reward trades is what I'm looking for, 1-to-1 typically. If we get more than that, like we had on the Netflix, that's great, but that's not every trade. If you risk 500, looking to make 500. If you're risking 1,000, you're looking to make 1,000. That's normal. But we do have trades that go really, really big sometimes during earnings season. Now, Netflix was not an earnings trade, but they will happen. You can't really plan for that. You just let the momentum fall into you and watch for the targets that I'm giving you in the letter. Any questions here so far? I think we'll have time for me to pull up the market, look at some things here before I go. Anyways, I mean, I don't even have to reiterate this, even though I talked about it earlier. You know, people are talk about floundering their trading. People are feeling very insecure in their jobs right now. It's COVID. It really is. In the economy, gas prices going up, interest rates going up, the unknown, okay, what's going to happen, corporate taxes going up. There's just so many things, and we can be great employees, productive, outgoing, hardworking, and it may not even matter to our employer in the end if the company can't keep you on. Airlines, the travel industry, the restaurant industry, all of these things have been struggling in the last year. Well, the beauty industry as well. Television, I just had a producer friend that just texted me and he said, it's crazy what's going on right now. Companies do not want to spend the same money in advertising. And so that's how television companies make money, from advertising. So if companies don't want to spend the same money on advertising dollars, then they're not raking in the same amount of money. And of course, they still have to pay all their employees and their anchors and everything else. So we live in a very interesting time right now. As far as day trades, Marcel's asked me how many trades I do a day. I try to do one a day and done. But if I do want to take a stop, I'll do another trade. Okay, unless I have a power trend day going where I'll do a couple things with the market. But that's not most days. Most days, one and done. Now, as far as options, like I said, I won't do an options trade every day, but sometimes I'll do a couple. I'll couple in one day like we did yesterday, because I'll read the market. I'll say the market's going to gap down tomorrow. Therefore, we're going to do a couple puts and we're going to get the move into the morning. Okay. But day trades, one a day typically. The percent doesn't matter to me. I'm not making a decision on my gap trade based on the percentage. No. Again, don't think like black and white. Don't think black and white. Traders are so funny. They're like, oh gosh, it's not black and white. Trading isn't black or white. Live in the gray. That's where you're going to succeed. That's where you can get rich. It's not black and white. You cannot program into the thing and say at 22% and in 1/2, it's going to go here and boo de boo. No, move out of that. Move out of that. Move out of your comfort zone of feeling that you need the black and white. That's one of the reasons also why many people lose, live in the gray. It's that dot. It's that middle space right in the middle there. Okay. I'll talk about that more if I have time at the end. But anyways, it's mind over matter. Mind over matter. Again, share size should be consistent with your account size. If you're not sure of that, you can ask me. I do risk more in options because I want the overnights, and sometimes I'm doing expensive stocks like Amazon and Tesla that cost more. But you can do day trades on options. You could just do options. You could just do day trades. It's up to you. It's whatever you feel comfortable with. It's the same system that I teach no matter what. But again, having a positive attitude helps you. You started out trading, you're losing. The most important thing for you to do is get green. Green, 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 green. Because when you've taken a hit and you're down money, this is another thing I find with people. They try to want to make everything back right away. If they've been losing money for 5 years, and they lost 100 grand trading with classes and whatever, they want to try to make it back right away. That's not realistic. Do not risk your whole account in one trade. Now, again, Netflix worked. If I risk my whole account, I mean, come on. You can't do that though. You can't. Take it day by day and step by step, and look at every day and say, today's a brand new day. Today I'm going to do it. I'm going to move forward. Okay. It's like if you fall off the wagon, if you're drinking and you want to stop drinking, or if you're smoking and you want to stop smoking, you take it day by day and you just say, today I'm going to do better. And tomorrow I'm even going to do better than even today. And that's how you have to look at it. You can't continue to live in the past. You cannot continue to chase losses in the past or live in the past. I say you have to get up and have amnesia. It's like if you're in a relationship and you had a divorce and you had a bad time, are you never going to fall in love again and you're never going to get involved with anyone again? You have to move forward. That's what it's about. You will never be successful if you don't move forward. It doesn't matter what happened before. Look at it like it's you became stronger from the failures that you had in the past, or the losses. Whether those were losses from paying for classes where you didn't learn anything, or whether there were losses from trades. It's all a learning experience, okay? I'm in the process right now of looking for apartments in New York. I don't have time to go into detail about it, but man, is it a learning experience for me. And I thought to myself, woo, this is an experience. And I mean, it's like, I'm still like apartment hunting right now, but I'm like, geez, if I wouldn't have started this experience, I know so much more now than I did 3 days ago, 3 weeks ago, and 3 months ago. Everything in life is an experience. You cannot become more evolved. You cannot become more successful. You cannot become wealthy if you sit on your butt and do nothing and never take risk and never learn anything about life. And there is a cost to learn. There's a benchmark. There's a floor. There's a floor to get in to do my class. My class is $7 grand. That's the floor. Everybody pays it. That's one. You pay the $7,000 for my class. You're not getting in, you're not learning it till you pay that money. Then you also have to have money for an account. And then you go from there. There's a floor, okay? I'm looking at a building right now in New York City. I almost fell over when I found out how much it's going to cost to get in the building. Just to get in the building, to live in this one building that I went to look at, which I didn't know anything about. And I went with a realtor to look at the building. I mean, I just started laughing because New York City is so crazy. But there's a floor to get in the building. It's a very high-end building. I have to pay this much money if I want in, and that's it. That's it. I have to pay if I want to get in. Otherwise, I can't get in. Now, I don't know if I'm going to move there, but the point is, it's like that in a lot of buildings. Everything is a learning experience. You want to get to the next level. You want to become smarter and wealthier and more free. What right now? And people are so trapped right now. Look at the stupid mask stuff. We're still wearing these stupid masks. I am so sick of these damn masks. I just rip it off every time I have to come in the apartment. I feel like I'm suffocating when I go out and wear the thing. And now it's soon going to be summer. People are feeling trapped. When you work for yourself and you empower yourself to make your own choices and you're making your own money, even if you fail, the confidence that you build in yourself to really do it instills that the next time, the next challenge that you embark on life, you're going to be able to do it again and again. You have to keep moving forward. It is so easy for people to flounder. It is so easy for people to get up. Most people give up. Most people will fail at this. They will never make it. They will never make a dime. They will lose, lose, lose. You have to look at it as something where you're moving forward and you are not going to lose. You are not going to fail. You are going to continue until you make it. And once that becomes your attitude, and once you're in that mindset, you're going to make it. I can't tell you when, but I know that if that's your mindset, you will make it. If you want guarantees, guess what? I guarantee you, if you quit, you will not make it. That's a guarantee. So guess what? Don't quit. Then you've got a shot. Then you've got a chance. Okay. I have no trials for my options newsletter. It's gold. Gold, Jerry. You can come in the trading room for a trial. You can come in tomorrow for that. If you want to trial the trading room, email me, but I don't call the options in the room. I call them in the letter. I will talk about things we did. We talked about Netflix today. No trials for the options letter. They're gold. But the room, yes. And you'll get my market read. Anyways, the key to the system is in the 26 points. I predict the stock. I talked about my class. It's a golden gap system. It's one strategy. It's all you need to be successful in the market. And you do not need a general, overall, broad-based view to make money. You do not have to know how to analyze financial statements or any of that stuff. Don't worry about it. If you want to watch CNBC in the morning to get some news, fine. But you don't have to look at all the economic data to make decisions. Just look at the gap. Just read the chart. Okay? And if your reason for doing this is to make money, you will make money if you learn what to do. You have to size yourself, right? You can ask me about that. You can ask me my thoughts. I'll give them to you. Say, well, I have this much money in account, Melissa. What do you think I should risk? Okay. Anyways, the class is this weekend, March 27th to 28th, 9 to 5. Cost of the class, as I said, is $7,000 at $69.99. If you want to sign up, you can email me. You must email me for the forms. Trends class is the 30th, 11 to 3. It's a combo class. 2 classes together, you save $74.99 for the combo. And I'm doing a spring special. This is a good deal. If you sign up by tomorrow, you get the trading room free and the options that are free through July 4th with the class this weekend. The deadline is tomorrow. You do the class this weekend, you get in the room then starting next week, and then you got the options newsletter starting next week. Now, any questions here? If not, I'll just quickly pull up the market. We got 5 minutes left. Any quick questions? There's my email if you want to email me for a trial for tomorrow. Next week, I'm going out of town for a few days, so it'd be better to do a trial tomorrow. Let's see what's going on here. Can you see my chart, or do I have to stop and unshare it and then share it again? Can everybody see the chart? I have Netflix up. No, you can't. All right, let me stop and share it again. Can you see it now?
Yeah, we can see it, Melissa.
All right, let's look at the market. Rally back. All right, I lost the questions. Let me find the questions quick. I'm just looking at this here. I don't know if anybody has any questions. Oh, here's the chat. Yeah. So here's my take on this. Just in the last 3 minutes here, Amazon, I called puts in this today. If this collapses tomorrow, the market's going to go with it. So I'm watching Amazon. Like, this is not going to fall off a cliff and then have everything else be green. That's just not going to happen. So you really got to watch. This is closing at the lows. This is closing week. If Amazon gaps down tomorrow, it can hit on through 3,000. If Amazon falls like a drop between now and tomorrow morning, then the market is not going to hold. I mean, this is just not going to hold. Look at Apple here. But I think we're lower right now for the short-term period. If Amazon breaks, that's my 2 cents. I'm surprised today this didn't continue down to 3,000. It's hanging on by a thread. And if that continues, then Netflix will continue too. But this was a beautiful move, and it was a good move to get in and out with the profits. And the 527.50s I called actually expire tomorrow, so everybody had to be out of those today. I did call the 510s out for next week, but don't forget next week is a short week. Next week is a very short week. So you're really going to make the money this week, because next week you only have a couple of days. Anyways, I like Amazon lower. And if it does, everything will fall with it. Look at this here. It's going to close right at the lows. Let's see if it breaks the low before the close. Low today, and this is 30.37.14. It's going to try. It's going to run out of seconds. Any questions from anyone about anything? Be very careful right now. Don't trade alone. If you don't know what you're doing, don't trade at all until you learn how to do it. And if you don't have enough money, then save. You do not want to just throw money into the market and lose. In fact, let's look at this stupid GME thing before I go. I knew this was going to get bought around today. People bought it. I would not be surprised whatsoever at all if this fell again in the next month. This is such a disaster. Good day. Thanks for having me, Flashstone. One of these days we'll meet. I'd wait till New York comes back.
Thanks again, Melissa. Your presentation was great. Fausto actually had to step out. So I just wanted to thank everybody for attending the event today. Greg, I don't know if you're going to play the NASDAQ video at the end, but I just wanted to thank everybody for attending the event today. I want to thank all of our partners for making this even possible. And I hope you all have a great rest of your day. We're just going to play Fausto on NASDAQ here. So hang tight. Got it, Greg? Perfect.
Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, New York City, we have Fausto Pugliese. He's the founder and president of Cybertrading University. We're going to take a look at how traders are using Total View. And Fausto, it could not be a better time to have you in with us at Marketplace. Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, New York City, we have Fausto Pugliese. He's the founder and president of Cybertrading University. We're going to take a look at how traders are using Total View. And Fausto, it could not be a better time to have you in with us at Marketplace, because with everything going on, the volatility we've seen in the market since you were with us in the middle of February last time.
That was pretty crazy.
Traders are asking themselves, what's the bottom, what's the top? But as a day trader, you can kind of get an inside look when you're looking at a single stock.
Yeah, what it is, Jill, is that, thanks for having me again. And yes, when it comes to day trading, people realize that what happens over the course of the day, which trickles down to a swing trade and to a long-term investment. And my phone's been blowing up. People keep asking me, Fausto, is this the bottom? Is this the bottom? Because we're looking at the market all day. And honestly, this is how you really know when it's the bottom. When you have the worst of the worst of the worst news and just constantly all negative stuff, and the market's not going any lower, that's when you know it's time to buy. So as you see, like, a lot of bad news keeps coming up, and then obviously you saw what happened yesterday when they lowered the Fed rate by a half. It took for a big decline, and all of a sudden the market's up with about almost like 900 points so far. So and there's still a lot of bad news that's coming out with the coronavirus and everything else, but that's really when you know when you hit the bottom. So for some of the listeners out there that really missed the boat when the market had a big rally, you almost hit 30,000. You know, these are the opportunities. You know, honestly, it is like the same thing I saw back in 2008 when we had the financial crisis. So once you start seeing all the bad news, things start backing up, start going up.
All right, let's take a look at our example here today. We're going to look at ticker symbol MRNA, NASDAQ listed, of course. What are we looking at? Where's the levels that you're looking to sell?
Okay, so listen, what is mRNA? You know, I keep bringing up stocks, and people are like, what does this company do? It doesn't matter. We're just here to make money. The main goal about Total View is you have to understand how it works, how to know where the buyers and sellers are. It's all about supply and demand. That's why it's such a great tool. So we're looking at a chart right here, and we're looking at the stock right here. And the first thing people notice is, like, the stock's going up beautifully. Nice. Look at the stock. Started this morning. It's at 25.80. It's at 28. Is it going higher? Now the goal is, why does the stock keep breaking out? It hits a resistance, it comes back down. It breaks the previous resistance, keeps going up. How do you know it's going to keep breaking higher highs? And what we're going to do this time is we're going to bring a video so you all could see exactly what it's like to see in the real market conditions.
All right, so let's move along to our next slide here. That's exactly what we're doing. Let's take a look at Total View. I'm going to let you take the reins. Tell us what's happening here.
Okay, so we got like a little minute video here. So we're looking at some real time. And the key here is time and sales. These are the transactions that are taking place. We're looking at level 2. Level 2 is basically people get for free, but it doesn't give you the depth of data as Total View does. Now, the key here is that you don't see that many sellers out there. You're just seeing the best bid and best offer of that exchange. But you'll notice how the stock keeps going higher. What we need to focus on is where you see the big sellers. And you're looking for big orders. You got a 51 different orders out there, right around 28. Things are going so quickly, I try to slow it down. So right around $28.50. So that is really your resistance level. So when you're looking at a stock going out, going higher, you're going to say, is the stock going to break out? So you see it's coming up to this guy right here really quickly. You see it's coming up. It's coming up to this person right here. So 70,000 shares, 5,000 shares. So it's going to come up to that seller. Now the goal is this: is that guy going to get executed? Remember, you have 100 share sellers, 300 shares, 1,000. But you have a big order out there. You want to see if that guy gets executed, and you want to see if that's how it breaks out. Remember, what makes support and resistance levels is buyers and sellers. So you got a seller out there. So we're coming up to that seller right here. Now the goal is to look right here and see if that seller gets executed. And you see it's coming up to the seller, and boom, the guy gets taken out. It's actually executing it. Boom, 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 boom. Look at that. See all those trades actions? It took the guy out. Now look how fast the stock goes up. From 250, we're at 260, 270, 280, boom, like that, as quickly as that. That's why it's so important to know where the orders are, know where the resistance, and see if the guy gets taken out. Now, when we get to the next slide, look at it. We're already at 2880.
Yep, and you can see these 35,000
which
orders.
is exactly. Now this is the next order. Now the next question is: here's the next biggest resistance. There's a 33,000 shares for there's 100 different orders out there. Now then that's where the next resistance level is. So the goal is you hit a resistance. Where's the next resistance? The next resistance is the next biggest seller. So now we're coming up to him, and we're going to see what's going to happen when he gets to 29.
Yeah, it happens so fast.
Well, also this is about a 5-minute video that I was able to capture when we traded this stock, and I kind of speeded it up over about a minute, so it doesn't move as quickly. Boom, we hit 29, the guy got taken out again, and look at the stock just took off again. And the thing I want to explain to you, Jill, is that, and your listeners have to understand, is that when you have a big seller out there and that guy gets taken out, that is a very big demand. Someone says, oh wow, I'll take that 30,000 shares, and that's why you get the stock that really, really starts to take off. Now the next thing is that you're going to get some resistance levels. It's going to start backing off. There's always profit taking going on, right? Of course. So when you have profit taking going on, you could see profit taking going on. But the question is it really a profit taking, or is it just people just, or is it really going to go lower? In this case, it's not. Seller got done. Remember, we just watched the stock go from 28 to 29. Now look at it. We're at 29.50 already. Stock just keeps going higher and higher because those sellers are getting executed. As those sellers get executed, that means there's a demand for it. When you see big block orders out there, it makes a bigger demand, and that makes it higher. Now, the next resistance level, obviously, is going to be where we have to focus on, where the next biggest orders are. So we got some, I think we freeze, right? We're done?
Nope, we have a little bit more to go here.
We slow down over here. Yep, we're done. So the next video we're going to show.
Yeah, we actually go to our slide here, so this is where you're looking at those levels.
Right, so we're looking at the seller. So we have a 67,000 share seller at 28. So now we have to look what we call iceberg orders.
What does that mean?
Okay. So it's a funny story. So I came up with this word about 20 years ago after watching the movie The Titanic. Okay, actually, you watch that movie? Very sad movie. I definitely am recommend it. So anyway, what happened to Titanic? It hit an iceberg, and the thing is, everybody was focused on the pretty of the ship and above the water. They didn't realize it's not what's above the water; it's at the bottom of the water. Icebergs are really big, so what happened? It crashed and it sunk. So what we're looking for is big iceberg orders, which we call, some people call them big block orders, but when you see a big order, it's called an iceberg order. So now we're looking at a 28.90, and we're looking for a resistance. Once again, stock's going higher. We need to focus on the next resistance level.
All right, and which is on the next chart here. If we take a look, yep.
So here's just a quick little screenshot. So as we're looking at it, you see, it's a lot easier when you're focusing on, when you're just looking at the level, the total view, and it's easy to point it out. Now, please keep in mind, your listeners have to understand, we're fast forwarding this pretty quickly to get to the point. It doesn't move this quickly. But I'm showing right here is just a quick screenshot. What we're focusing on is this big order right here for 73,000 shares, and there's 315 different orders out there making up that 73,000. Now, the thing I just want to point out is I just want to teach everyone a quick little lesson.
Yeah.
Don't ever sell anything at $30. Go out at $29.99. You just cut the line by.
So that's for anything that's like an even number.
Biggest trick I was taught by my mentors when I was younger. Listen, everybody's going to think 30. Everybody's going to think 20. Go out $21.99. You just cut the line by 73,000 shares. That's a very good.
It's like selling a house or buying a house. It's like that, those incremental psychological levels.
Well, if you remember, if you look at it, the stock has a penny intervals. And so that's a little tip. But the thing is, let's focus on what happens to the 30. No, just right off the bat, you know that's a major resistance levels, and that's what we have to focus on. That's for the stock to go any higher, it's got to get through that 73,000 share seller on total view.
All right, well, let's take a look at that next slide. See what happens next. Now we're going to get the other piece of the trade.
Okay, so here we're looking at the stock moving. Here's 29.45, 29.48, 62, 67. So the sellers are getting executed. You can see the transactions taking place, but we know that there's that guy sitting right here. And now his order's coming up. Look, he's starting making up the ranking. It's getting up to 30. It's getting close to him. So let's watch what happens. 74, 70. Look at the transactions taking place. It's trying to get there. And by the way, those orders, they're all real. People think like they're fake. Those are real orders. Can a guy cancel it? Of course they can cancel it. But that you have to take very seriously, and that's a real order out there. So now as we're looking at it, and as it's trading, it's trying to get there. Actually, it kind of almost tested it. You see that right there?
Yeah.
See that candle right there? It's hit it, and now it's starting to back off a little. Now you're starting to see the red candlesticks. So now it means that the last sale is lower than the previous.
And this works for all kinds of stocks. ETFs, would it work for ETFs also?
ETFs, futures, options, it works the same way. Remember, it's the movement of the stock that makes all those other things. Yes,
Right.
ETFs and everything else. You could look up any ETF, and it'll come up on total view. Look, now we're down to 29.
Yep.
So my point that I'm getting to is this. If you didn't have a game plan, Jill, and didn't know that seller was out there, and you try to
And actually, if we go to the next slide, this is exactly what you were talking about. There's your level right there.
If you didn't have a game plan and knew that seller was out there, and look at that candle, that stock literally moved. Look how fast it moved in that one bar chart. If you didn't have a game plan to get out there before that guy was out there, and if you didn't what we call shaving, if you didn't shave just before that 30 and cut that line, guess what? You would just look how much money you would have lost. That stock didn't even drop from 30. Look where it went to. 27.30. You would have got crushed on that trade. Because what happens, if that seller's out there and he's not getting executed, he really had to sell that order, Jill. How is he going to get out? He's got to sell to the buyers. If he hits the bid, he's running that stock down, not you and I. Remember, we're not trading 74,000. Someone else is, and it's not one person. We saw it. It was like there was several people out there doing it. And that's how you got to focus on using the total view when you trade in today's volatile markets.
All right. So cool to actually watch it happen in real time. Thanks so much for doing that for us, Fausto. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.